Left and a pretty eventful Thursday afternoon. It is the day before the final day of April. Pretty impressive to say that. Pretty impressive rally back for stocks and a continuation move that we saw from yesterday. I mean, we had the gap up yesterday and then we kind of went sideways a little bit all day long. Still a positive day, but a nice rally on the back of some tech stocks. Yeah, look at the NASDAQ right now. Wow, 2.6%, full 2% almost for the S&P as well. 1.25 there for the Dow, back to the upside again. Meta leading the way ahead of Apple. Yeah, the big one coming tonight. 1.6% for the TSX here in Toronto. Big rip there for crude oil. We'll talk about that. Nice move back higher, 2.6% for crude, 1.9 for Bitcoin and Ethereum. I'll show you a very green board here, right across the entire thing almost. Tech stocks leading, as we said. There's one. I don't even know what that is right there, but there's one. It's Enphase Energy, apparently. Back in, I feel like that's wrong because that's in the semiconductor group, but yeah, one in negative territory. The rest of the entire group, all positive. DPZ, 4.5% to the downside off their report. Otherwise, though, pretty positive day for consumer discretionary names. Yeah, I was looking at Home Depot over lunchtime. Bounced off 300 pretty nicely, 3.8% back higher. Today for HD, some of the retailers following through as well. There's the big one up here, 18%, we'll call it, for Facebook. Meta having quite the day. Pretty impressive move to say the least. We'll talk about Facebook. We'll talk about Match here. Google as well, 3.8% off their report as well. Twitter's here. Netflix is here. They're all back higher. Comcast, the only one standing out, 5.5% for some of the streaming stocks I saw back lower. Hope your afternoon's going well. Welcome, guys. It's going to be a pretty eventful couple of hours again, ahead of Apple, ahead of Amazon. We get earnings from both coming up after the close tonight. So if you thought this rally was impressive, maybe we see even more positivity coming up tomorrow. If you're joining us for the first time in the afternoon, we spent some time to start things off, kind of go back and revisit some of the opportunities that we had available to us at the open this morning. Stick around as well. Danielle Shea coming through in under an hour. We're going to get her take on a crazy earnings season so far and what she thinks Apple and Amazon will do, how she's looking at playing both. We're going to get started, though, with a look at one of Neil's trades from this morning.
Yes, sir. We're going to talk Tesla. And if you hear me on the every day on our show, our live show in the morning, I always say, we have the best community out there, and we absolutely do. Love all of you, because I wasn't really looking at Tesla this morning, and this trade review is about what do you do when you're reacting to something big and you don't necessarily have the levels that you wanted to work off of. Now, obviously, we do set the stage always by getting an idea where things have come from. So, you know, let's remember what Tesla did yesterday off 1,000. If you weren't paying attention in the market, you couldn't have been watching the market if you didn't see what happened. It was just absolutely incredible, the velocity with which shares were declining there through that $1,000 mark, $100 to the downside and more. 114 billion with a B, baby, value taken off the table for Tesla. And it did make a bottom at 860, which we'll get to in a quick little second there, before a slight recovery. And then coming into today, it was sort of, you know, sitting right around after we had the Meta, I guess, bump. We had the earnings bump from Meta, making the markets feel a little bit better about themselves in the morning. And we're sitting right up at the 900 level. Now, I was trading Meta. I was in Teladoc. I was again in Boeing at the open. I had too many things I wanted to look at. I had orders on Qualcomm and Microsoft, looking at a bunch of different places, and none of them were really Tesla, because it just didn't feel like it had as much juice as the others to make a move. Obviously, that was wrong. And then all of a sudden, everyone's saying, look at what Tesla's doing. You pull up the chart, and it's already in free fall. As a matter of fact, we were through 860. Like, we were through this 860 bottom. So what can you do at this point? Well, you can go that scalp mode. I already know that below that 860, it's a floodgate type of level, but I'm not really playing off of that level. Thus, what is it going to do? Is it going to consolidate and give me a shot to short in front of it? Maybe that's going to be the case. You can always look for that. And certainly I was willing to do it if it would have given me the chance. However, the first look was 850 break. It's panic. People would have had stops at 860, and anyone that wanted to have a stop a little bit lower than that is going to target that obvious $850 area. So target one, scalp trade off of 850, in and out in seconds, man. I'm telling you, that was in, hit bid, out take the first leg and have your win. The second trade was where we could actually say, let's get into something where we can try to hold it not even that much longer, but just for a little bit more juice. Once it pushed down, you had the first sign of buying the entire morning, right? This is a 3-minute chart here, so it's the first green candle on a 3-minute. What do you think it'll look like on a 15? Not very good, obviously, you can see over here. But we made a bottom randomly at 8:30. We popped back up to try to test towards 50, and at 8:45, it just runs into sells. It keeps trying to fall back down, and then tight consolidation break the 8:45 level. Cannot even get there, I'm telling you. It then pops up. I see the offer get to 844.50 or so, and the bid just does not want to follow. I mean, the bid's popping up to 843, 843.50, but there's just nobody willing to step in and really close that spread. So I know 850 is a bit of love, and I even said this on the show. At this point, if we break 845, 850 is inevitable. If it snaps back through here and breaks that, it's going to go to 850. There is no point sitting there waiting for an 850 fill. If you get it, you're probably getting run over. If it's going to drop, it's going to drop from here. So might as well take the shot and have a tighter stop anyway. So that's exactly what I put on. It was an 843.50 short, falling right back into the consolidation range. And the key thing about this is you're not trying to capture what you've missed. I was even saying, heck, man, maybe it'd be a long if it got to 800 because it's a round number. But you cannot recreate the magic of what you've missed. You can just try to structure a trade in the moment with what you've got to work with. I wish I could tell you about how I magically reversed into a long or caught one of these breakouts. Truth is, missed some of those. Was looking at other stocks for the longs on that on today. But the key here was the biggest opportunity was missed. You can get that FOMO. It'll happen to you. But how you want to react to that is to try to quickly make trades that are structured. 850 is just a clean psychological level break. Not going to get cute with it in and out. And then after that, try to find something a little bit more structured, which gives you a good rate of return. But have a plan of action. Know your key levels. Don't force it, because if you start chasing lost money or missed money, you're going to end up in a world of hurt. Sometimes when you go with the grain, however, there are still opportunities to be had. And once again, shout out to everybody who was just yelling at how far Tesla was going. Might have missed that one if it wasn't for our great community.
Pretty impressive two-way action in Tesla this morning. A lot of names, in fact, gave you that early kind of flush, got rid of some selling, and then it's been nothing but upside ever since. Right back to day highs, in fact. For a lot of the names you're going to hear about here in the next few minutes. Facebook, one of those. Meta, the first we'll talk about on the list. In fact, it was top of the list this morning that we sent out in the pre-market, guys. Make sure you grab that every single day. Then join us at 8:30. We'll get you set for the open every single day. Tesla was talked about pre-market as well. 18%. 18%, I'll say it again, for Meta platforms here off their earnings report, taking the entire NASDAQ on its back, really, and carrying this back to the upside. We retake $200, guys, and then some for FB.
Facebook was an interesting one, to say the least, right? We started off a little, slippery, just like the market did, but apart from what the market was setting up, Facebook itself wasn't looking too great, especially around that 200. This is a 60-minute chart. You can see that we were stalling around 210. We came off a little bit. We can break this down to maybe a 15-minute chart to show what this market wants to do, and all you see is sell-side action from about yesterday's aftermarket session. Coming into today's, every move up has been sold, and then we opened up, tried to put in a break to the top to 208. Nope. Down we go through 200 again, all the way down to 195. And then the market got going and decided that, Facebook decided it's going to catch up as well. That secondary move here, right around 11:45 through 12 o'clock at 200, that's probably the only break you could have taken on Facebook. But because it's already so much, and by the time this happened, the market already gave you many other choices to go with for the long. So that would have been a nice little trade. Obviously, $7, you can say that now. But the next one up, it's going to have to be that 210. That 210 is solid. Everyone's going to be looking at this big round number, which makes me hesitate on taking the break right from the get-go. But at the same time, if we can get above, stay above, and then absorb some selling, then I think longs could be back on board here for Facebook. If you didn't catch the 200, I didn't catch the 200. If you didn't catch that one, next up has to be that 210. I know 206 was an option we were talking about this morning, but with the way that the opening move went all the way up to 208, I had to cancel that read immediately. So back to 210 on the upside if we get going towards the end of the day.
So this is what happened to me on Facebook. Remember I was talking, whoops, did that not work? Oh, boo, I wanted to do like the slap in the face there. Let me try it again, there we go. That's what happened to me on Facebook really early on. And then it looked like it was gonna be an all-world recovery, and then we'll get into it, but you remember that 206 level? Look, I was sitting in a short and it said 730 is too early, and it's already come down a couple of bucks in the pre-market, and this was really early. It was actually before that, it was like 712. Like I just sat down and was like, oh, this looks good. I log in, it's like, oh, this looks good. Let's just get short Facebook right here as it rolls over a key level, 203.50. And then a couple of minutes and I was like, no, you haven't even really gone over things. You haven't planned it. This is stupid. Just get out of the trade. And then this happens, right? So it's already popped through 200, and then we start coming back in. And this is where you get anchored to the price that you could have had before. So right in before 930, I end up taking the short in front of 203. But the only thing that went well was I didn't average into it. I still maintained the 206 stop. Got absolutely smoked, of course, when it stopped out at 206. We had a data issue, so I know this is going to show up as purple. I was not short 05 all the way down. This was me crashing along in front of 201 and then cashing out in front of 04 and 05. And I actually shorted here at 200 and then took it out at 197. So didn't hold all the way to the bottom. At this point, it's just pure frustration. Tesla made the bottom, I think, of the market here. And when that happened, it was just going gangbusters. And now it was a matter of, okay, well, does it turn around at that 200, 201 spot for a short trade? And then does it hold the top at 206? Once we've cleared 206, this is back to, like you said, Arun, the higher time frame long, which I got into at 07 after lunch. And that 07, it's got room A to 210, and if 210 breaches, it's got even more room to almost 219, maybe even 225 if you go to the daily chart. Like we're in pure breakout mode potentially here on Facebook. So giving it a couple of bucks here, thinking first level 10 is pretty reasonable. Now we only have a couple hours for this to happen, but overall up 18%. Remember, that's not that crazy when you factor in where this has come from. If you price that against like an average price, I said this in the morning, price that against like a 3-month average or something along those lines or back to last earnings, and you tell yourself, okay, well that's really just talking about a $30-something move, that's about 10% from our last earnings print. So you put these things with a bit of grain of salt when you say, can it go any further? I think it can. It's about to take out the 50-period moving average. We closed above that, and we're talking a multi-day rally.
Definitely showing all of the strength today, including some of the semiconductors, guys. I was just looking at a few, including AMD once again back to the upside today in a big way. In fact, we're at day highs as we speak here for AMD. But let's talk about QCOM because we had Qualcomm on the list this morning off of their report. But the entire group, I mean, the NASDAQ's leading, so obviously they're all going to be involved here. 5%, to say the least, for AMD right now. QCOM, though, with the pretty good report.
Qualcomm?
The irony about it is, like, I'm kicking myself because I canceled a bunch of stop orders when we went to lunch. And thank you. Shout out to Jeff Mendel, by the way. It was a fantastic lunch. I probably ate way too much. But yeah, there was an opportunity cost to that because the breakouts from the morning, not going to leave stop orders in. I'm going to be flat. I'm not going to leave stop orders in to get into position when I'm gone for an hour. It doesn't make any sense to do that. But that 88 break that I loved this morning, cancel it, and then you see the breakout start to go. And I'm not chasing this one. I think there's probably room into 91. Of course I do, but I think if we can have any kind of a pullback, which the market feels like it wants to do. And if you look at what the ES is doing, I'm sure Arun either has already said it probably a million times, but if we get this consolidation on the ES, you gotta expect maybe it pulls back if we're gonna make another leg to the upside. So if that happens, then maybe we'll get a shot back at that 88 or maybe sub 88 into 87.5 and we'll buy a dip. Instead, I went over to Qualcomm. I don't know, we're not going to really talk specifically Qualcomm, so I can talk about the one that I'm in right now, which did give the breakout trade and wasn't that much of a missed opportunity because if you look up here in the 15-minute, that 47 to 45 channel from over here, clearing out of all of this area here, got taken out, and now we're in the top end of the channel. Decent chance, I mean, we could pull back and break out of this, But as long as we're above 145, put up a couple of bucks here, this has a ton of room up to 50 and then to 152. I know it's up 8%. I know Meta is up a ton, but sometimes if we're really starting to go here, understand that volatility is up. And when we have more volatility, you can't hesitate to buy high and sell higher. You can't always buy the lows or buy the dips. Sometimes you're going to pay up when you've missed out on what was an unbelievable V-shaped recovery. I did have a dip buy at 140, but that's pretty irrelevant at this point because I didn't actually take it when it got down there.
Yeah, and for me, Qualcomm, the only read I was going to make on Qualcomm is going to be that 147. Now, we did breach it briefly. We went as high as 147.11, coming back in a little bit now. But again, the market's so extended to the upside that do I want to take a break this late when the market's starting to stall out around these 80s on a breakout trade? I don't know about that. So I'm going to say no. Let the market pull back a little bit. And that's the expectation here, is that the market should pull back a little bit because of the volume that's coming in around these 80s. And then if Qualcomm wants to take a shot towards those 147 highs again, then we get on board and take the break the second time around. But for now, I think pull back a little bit in Qualcomm. But this also opens the door, though. That's the thing you got to keep in mind, is that although you may not, let's just say you do or you don't take this trade today, this opens up the door for another trade later this week, tomorrow, or even next week. As long as it stays within this range, it's giving you the edges that it wants to play with, and it seems to be about 139 on the bottom. Let's move that down. I'm going to say 137 because I don't like what's happening in the last few days here. So 137 down below, 147 up top, wide range in the middle. You take the top off, you go for the breakout, you come down. There might be a value purchase down here somewhere as well in the low 140s. So definitely setting some edges here that Qualcomm can work with, at least going forward. And hey, in the event that we break that 147, next up is going to be about that 154. So that's what we're looking at right now. I've already got 3 longs, as you guys can see on the board. We've got TDOC, we've got Apple, we've got Nike. Apple and Nike from this morning, and TDOC we picked up not too long before the show we got on the show here. But all working out real well right now. As long as the market, even if the market pulls back, actually this rally is healthy. A pullback is a healthy thing for this market. So a pullback would be greatly appreciated so this market can actually take another step to the upside.
Just reading a couple notes from JP Morgan here. Let's talk about PayPal before we move on. I have Pinterest on there, but the other notable move here, guys, PayPal, wow. Huge move up today, 11%. Was doing really nothing until about lunchtime. I just noted that it was the number 2 stock mentioned on Reddit today. So getting all kinds of Reddit love. 93 ends up being the top there for PayPal.
This is another one, because we did go over this. And this is what happens in the morning, right? Like, you saw the bevy of stocks that were out there for you. Like, we were not even talking about Boeing, which gave you just another gorgeous shorting opportunity. Spotify was pretty good today. Obviously Tesla and Microsoft doing its thing, and Meta. But PayPal was one that we went over, and it was one of these. Look at the double bottom that it put in at 82. You've got the tight consolidation. It didn't show any signs that it was going to take out this level, from the day before, like that 86, 87 break. It just didn't look like it was going to happen. So I wrote it off, and you should really never do that, man. It's like, have your alerts. I use the alerts, but like this is one where should have just had the alert anyways and not given up on the stock. There's no question about it. But now it's churning through that, and I'm not sure this is actually stopped. Like, as long as we hold 88 to 89 somewhere in that channel, like this could be like a multi-day type of thing. I understand we have to get through Apple earnings, right? Like everything is with the caveat that we still have some earnings to go through. If Apple were to shock the world to the downside and break support, you can pretty much throw a lot of these breakouts out the window. But this one still works as long as the 88 to 90 channel holds. And unlike the 3 longs I'm in, I don't see. I don't really see anything I love up here trying to chase it. It would have to try to come back at least to 90 before thinking about a dip buy in PayPal. Congrats to everyone that got this one. It's a fantastic runner. And there hasn't been a lot of reason to get out, to be honest with you. Like, if you had the 86, 87 break, it's really, like, maybe at 90 you would have taken the piece off. Outside of that, the 93 top doesn't really stand out for any particular reason other than the ES got to a high.
Yeah, what are we talking about, PayPal?
PayPal.
Okay, PayPal. I was looking at T-Doc. I was just actually trying to work an exit on T-Doc here. PayPal, it was one of those trades I had earlier, actually. I have an alert. Do I still have the alert? No, I don't have the alert. It was to the downside, which never got triggered, by the way. Remember, I wasn't even looking at PayPal on the buy side. PayPal was the one name that I did not have ready to go on the buy side. Apart from all the buying that I was doing earlier, PayPal, short 84 is what I was thinking. We never got that 84 break. So PayPal decided, hey, you know what? Forget 84. We're going to go all the way up to 93. So as you can see, this is the line I'm looking for. Downside move trend. The market's trending, or the stock itself is trending. And we were stalling out here around in 94. So I'm like, you know what? It's worth a shot to the sell side. Let's put the alert out. Alert never gets triggered. PayPal decides to go up with the market. So at this point now, I can mark the 84 as a support level. All right, that short never happened, but at the same time, it's a decent support level I can use now. On the way back down into these 87s, the 86s, we can actually, if we can find a reason to go long, there's a decent long here now. Given that the 84s held this well, there's a decent attempt to go for a long here if we just can get it to slow down. We don't want it to come down too fast. There's some volume here, but as long as it can slow down, we can definitely catch a bid here and see if we can't use that 84 to catch a nice little springboard action back towards these mid-90s.
Another one, guys, to discuss Pinterest, up 11% back towards day highs here. I was just counting up how many price target increases there have been and upgrades there have been. I think it's about 7 or 8 at this point from analysts on Pinterest today. And I bring this up simply because an 11% move back to the upside in a stock like Pins, how much of that is going to be just simply relief rally at this point for Pinterest versus, yeah, it was a good report, but overall, it's about time for a bounce.
So remember when there was the whole, hey, Pins might get bought thing? Remember when that was cool? So if you go back to October and think when this was like $60, how impressed would you be with a $2 move to the back to the upside when this essentially, when it reversed, like its first initial move down was a good $16. It's not that impressive when you start looking into $2 in that regard, the 10% move. And this is what you always have to keep in mind. So yeah, relief rally, it doesn't look like anything's even happened on the daily chart. It's not until you look at it on your lower level time frame when you start to see, okay, well, that's really, really impressive of a bottom that got put in here. And I was looking for, 21 had to clear, and I looked at it and said sort of like, this is your 21 level. I'm like, we need to at least get above that. I tried to take a breakout long. At the open, good luck. If you try to take a breakout there, you're screwed. And if you hung on to it, you were even, like you were just, your day was over if you tried to hold a breakout long on anything. And this is why breakouts have different stops than like when you're buying the dip or you're opening something up. Like if it consolidates above and holds the range and you take it and pay up to 21.25 when it's shown support above this level, that's one thing. You can give it a little bit more room. But when you're taking a clean break at 9:30, that doesn't work pretty much right away and you're going to get screwed. Like night, like you're done. Now that we've held the 19 and now come back up to this high, you're set up for potentially tomorrow. I don't know if we have the juice to get through it today, but you're set up potentially for us to close and then hold that 21 and run it to 23.25, which could be the play. I wish that I wasn't looking at so many other things in the morning because I probably would have shorted 20 and a half if I had been more paying attention to it. But this was one of those, it didn't work right away. Just get out of the way of it. I didn't have a dip buy that was going. And sometimes on like good days, you'll have the most ridiculous looking outs. That's one out that probably saves, that's like a day saving out right there. Like you hold on to that or average into it and your day's over before it began.
Well, I mean, I had Pins this morning. We were, for anyone from the morning remembers, yeah, we went for the long at 20. And we said, hey, 19 is going to be the out. And we either get a break into the mid 2150 area or we get stopped out south of 19. Now, it rallied well above the 21, never cashed out anything. And then it did a quick spin. Market fell off. Pins fell off. And then it just stalled out here between 1950 and 19 even. I'm like, on the rally back on the futures, given how much it looked like at the time anyways, relatively weak Pins was, given the strength of the futures market, I was like, you know what? Of all the longs I have, this is probably the one that I can just dump for a flat trade just because it doesn't look like it's got the potential anymore, right? So I dumped it. And this is the chart on Pins. This is my entry right here. right near the 20s going into the open, and then we held it through here. 19 still good. As it's coming up, I'm like, you know what? Least potential, let's dump it here. So we walked away with like a 2-cent winner or something on this one. And that's just for me. The only reason I did it that way was just so I can cover the fees of getting into this trade, right? So took a 2-cent winner, sure, walked away from it, and now it's got another 80 cents. I mean, that comes with the territory, but at the same time, hey, we've got a ton of longs. They're working out just fine. I'm not too bent over it doesn't bug me as much because pins is only moving. The range is a lot tighter on pins, so it's not as bad. But I mean, it does hurt a little bit, but it's not as bad as say some of these other names if I had missed on them. So pins still looking strong. The 19 still good. Of course, if it takes the 2150 high, you open the door up towards the 2250s into 23s. But again, price points, risk reward has to be priced somewhere around that 20 to make sense of it. If it goes too high, then it doesn't make any sense anymore because there's a lot of resistance up top. So pins, I think the one trade I had this morning could have worked out well had I just held on and closed my eyes. But again, risk management, right? You kind of have to allocate differently. So for me, pins was a trade that I missed out on, and I'm okay with it.
A ton, right across the board, ton of positivity in the market, to say the least. Let's get into maybe the only two today that stand out really as weak on the day. TDOC, an absolute mess. We can talk about that. And also Ford. Relative weakness in Ford, guys, coming off of earnings, still down. Yeah, down 1.25% here, but we are kind of grinding back to the upside. Both of these, though, on a day when the S&P's up 2.5%. Definitely telling a story here.
The fun thing about this is like we're putting out what matters to look at today, and not what's going to be healthy for the psyche. Like we're not reviewing Boeing. We're going to go over Ford. And I said in the chat, like before we even got to this topic, wait till you see my Ford exit. That's a doozy right there. So like Ford came in, and it wasn't really that bad of an earnings report. At least I thought. I mean, everyone's bucking them for the Rivian hit that they're taking, which they haven't realized yet. But remember, the lockup for that's going to be on the 8th of May. So watch out for Rivian in a week and a half, or just under a week and a half. That's going to be a big event for sure. Ford, this is a tough one. It's a tough pill to swallow because when you go back on the daily chart, like I was looking at that 14 level when the market was screaming down and Tesla was heading down. I'm like, this was a solid report. It's going to find a bottom. Let's just go long if 14 holds. And when this level did hold the first time, you guys, let's go on the 3-minute where it looks even worse for me. So it holds that 14 failed break. So breaks 14, gets down to 1393 on the daily chart. I showed you like a 1390 area bottom way back when. I get the break at 1410, liked it so much we took it twice. And that's it's like the reverse of shorting at the top after it makes a failed breakout higher. You short on the way back, the new fresh high is you're out. Same concept here, except we're going long on after a failed breakdown. Yeah, it didn't work out. I ended up making the bottom wick on Ford right at 1027, and then it just runs with the rest of the market. So sometimes that's going to happen to you. You're willing to make top wick when you're shorting at the high. You're willing to make bottom wick when you're going long when something is defecating all over itself. Let's be real for a second, though. If Tesla breaks 820 and heads to 800, and I hang on to this Ford trade, well, it's at 350, and I'm just losing more money anyway. So I know it looks bad, but you got to have an out somewhere, because if you don't have an out, then your out is going to be when your account stops out. Like it'll be for a day trader, it'll be your daily loss limit. If you're a swing trader or you're doing retail, like it's going to be when you blow your account. But you can't operate in that fashion. Like you got to be willing to get burned sometimes. At least we knew the area that we're trading off of was successful in terms of looking at the chart, and that could have let me to get right back into the trade and just try the same thing over again when it took 1410 and rejected that low another time. I didn't do it. I was looking for a few other longs at that time, but you've got to be willing to have yourself a bit of an out there. And just an update, because I know we're going over Teledoc, but that Qualcomm is continuing this move. Like it's actually trying to get back through this highs. That leveled off. I made the genius decision to take out Facebook on a tight stop and add to the Qualcomm because it looked better on the higher time frame. Facebook has already taken out the high at 08. Qualcomm just getting there now. These futures are trying to go. The NASDAQ just broke the high, 3.5% now, and the ES is just about to take it. If that happens, Qualcomm should go to 10% up.
Yeah, I'm not going to touch Ford just because I'm not a fan of trading intraday, but I do want to say one thing. Bradley Taylor, thank you. I saw your super chat earlier. So thank you so much for your comments there about, I guess helping you out and just my overall market commentary. I do want to say one thing though. Sean is back, I believe. As far as I know, Sean should be back tomorrow. So today should be the last day, barring any unforeseen circumstances that I will be in. So hopefully you guys have been able to watch the morning show and the afternoon show to kind of get an idea of how I trade, because just watching one show doesn't tell the whole story. For all of you guys know that a lot of my positions this morning was building up against the selling market, and now we were sitting pretty. So it takes the entire day to kind of watch how I trade, and if you guys are committed to watching how I trade, I guess thank you so much for being there, Bradley Taylor among one of them. So we always love to see those comments and see that it's actually getting out there. But there's so many different ways to trade, right? I trade in a very wider, longer time frame. Sean trades in a very tighter, faster scalp, and then I think Neil's somewhere in the middle here. He kind of goes between the two. So many different perspectives and many different approaches to trading, and we just want to thank everyone who's watching and being able to absorb all of that information. Just take it for what it is. It's just knowledge, right? It's just there for you guys to teach, not to copy, not to follow, because you need to understand all the risk parameters and all that stuff that goes in with each and every trade. But just take the information, gather as much as you possibly can, and then create something for yourself. That's all this channel is about: education.
Yeah, well said, definitely. I mean, obviously, lots of different angles you can take into the market. We just give you options right across the board the best we can. Some of the, we'll talk about Teladoc here, but Teladoc, obviously a huge Cathie Wood name, talking about relative weakness. This thing off the lows today, ARC, that is, off the lows, still down 1% on the day, but 46, guys, comes into play on ARC today, back to 49 right now. Teladoc, I mean, they lost $6 billion in 3 months. I don't even know how you do that, but T-Doc, pretty ugly.
Yeah, I don't know the adjective to use for it, and I wanted to try to find it. I'm pulling it up really quickly. I thought I saw, I'd swear it was 600,000 shares that I saw was picked up by Cathie Wood a couple of days ago. However, when I go to that ARC trades and just look at the flagship, it looks like. Yeah, it looks like a couple of days ago was 65,000, not 650, so apologies there. And then a couple of days before, another 28,000. But either way, that's, hey man, conviction is conviction, and buying this thing in front of earnings was a heck of a lot of conviction. I just felt, I said in the morning, if it's a trap, then I'm going to spring the trap, because that's all there is to do, and that was going to be the short side of the trade. And at first it looked pretty good. It's going to look strange because I was sitting in the short at 32, willing to add at 33 or 34 for a bigger trade, and that never really materialized. It turned into just only the initial scalp, where we took some at 31 for the buck. And then I'm out here in front of 30. Now 30 it's SSR at this point, so I was trading a 30 breakdown, which means I'm going to get out in front of 30, anticipating a bounce at that price because it's SSR, and then if it consolidates, take the breakout trade. When I took, this all happened at the same time on a 3-minute. On a 1, it would look a little bit different, but I ended up getting the break very shortly after getting out of the initial short, and it just immediately didn't work. And then we tried shorting the 29 bottom, instantly didn't work. 29 again at the bottom, it did not work. And the thing about shorting at the low, I am never, ever, it's happened one time, and it's hopefully never happening to me again, where you short something that looks like this on a daily chart, you think it can go further, and you think the company is in a world of trouble and might be worth half of what it's currently trading at, but is down 40% and has a significant short interest, and you're trapped short at the bottom. It can't happen. If that doesn't work right away and the stop's triggering, it doesn't cause another cascade, then you gotta get away from the trade, because the next thing that's gonna happen is it's a long. And admittingly, I was looking for a bit of a different long. We had this conversation right before we got on here. Yeah. I'm going to ramble on here because this is kind of an important point. I was looking at the 32 break from the morning, and then the halt up high 31.65. I liked both of these for breakout trades. I'm like, I'll take some at 31.65 if it goes. I'll take some more shares at 32 if it breaks that level. And then I was like, well, if it doesn't make the break, I actually like the dip down here to 30 in front of 30 as well. So I was sitting there with bids to 30, and then stops breaking 65, and then 32. And Arun's like, yeah, I'm punching in at 31. And I was like, when I looked at it on the chart, I'm like, well, basically, getting long between 31 and 31 and a half was the same trade that I was bracketing around. It's like, oh, just get into the trade now. It's effectively the same thing as the breakout and the dip buy. You're just essentially taking in the middle of the flag, and then it breaks out. So it's on the squeeze. 33 just got rejected here. You're seeing I took it out the first time it got to 33. I still have some shares on. And at this point, if 34 goes, it's over. Like, I don't know where you're. Like, if this breaks 34, I'm thinking you could be at 37 in a hurry. So I want something on board in case that happens. It's a pure, relief rally, squeeze play, whatever you want to call it.
I mean, we had he has T-Doc, I have T-Doc. We all stepped in. Both of us stepped in. Neil needed some convincing, though. But he convinced himself. After hearing me just talk about it, he convinced himself, you know what? I'm going to step in. And then not too long after he got in, it fell off like 20 cents. He's like, I knew it. I knew it was going to happen. But you know what? It all worked out just fine because the read was the read, and we were working these 31s all the way up. Now, actually, this is the wrong chart. You'll see it on T-Doc, right? This one, this chart. So you'll see 31 longs here. We're just working, again, this was just turning around. The volume was just churning through these lows. We were looking at that 29 thinking, you know what, 29 break to the downside. If it fails, or even just a low break fail would be a nice little long. And there was someone else in the chat this morning agreeing, like, hey, you know what, everyone's looking for that failed break. Not everybody, but the failed break would be a much better trade than the actual break itself. Yeah. And that's what you got. They tried to get through those 29s, worked it a little bit, and then finally got that turn. And once it broke that 31, for me, the 31 was a clear one. You could argue 30, but because of the fact that we tried this 31 multiple times, and every time we got above, we failed it. So the fact that once we got above and stayed above, I was like, okay, this is our chance. This is our chance. They're trying to get down and they can't. So let's get the long at 31. We're not gonna, wait for a mid 30 print. So might as well just grab the long at 31. And hey, we've already cashed out $1.50 or $1.40, I guess, here in front of these halves. And now we're just going to trail this one out and see how much further it goes. Some of you guys are looking for 35s. I mean, I'd appreciate some 35s too. That'd be really nice because, hey, this one has a ton of space if it really wants to get going, because the next up would have to be, like you guys mentioned, between 34.50 and 35. And once you pass that, you're looking at that 37 to 38 level. So a lot of space to the upside. It's trending well. Just let it go. When the stock is trending and you're positioned really, really well, your job is to obviously cash them out along the way, but at the same time, manage as much as possible, meaning just trail it. Trail it as far as it wants to go, and then when it turns around, you cash away, you walk away, your trade's done, and you just got some money in your pocket now.
Hey guys, we missed that beautiful super chat from Bradley Taylor. Just want to say massive thank you to Arun. Your passion, knowledge, and willingness to help is a great example of what every trader should aim for. I wish you continued success at everything you do. Well, indeed, Arun, we wish you more profitable, successful tradings. And now let's go back to Brandon.
All right, yeah, a couple other things of note here, guys, as we continue along. DraftKings, I just saw back to day highs, another one looking very similar. A lot of charts looking like this. It's hard to believe. I mean, DraftKings is $14. Wow. This pre-market high may be coming into play here. Massachusetts, apparently, working on sports betting legalization as well. So that thing caught a bit about midday. There's also, there's one other one I wanted to mention. Oh, BBBY, Bed Bath & Beyond, once again. There was a big spike on volume going back an hour or so ago, up to 14.5 on some call buying activity, apparently, for Bed Bath & Beyond.
Speaking of buying, I haven't hit this one. Well, I hit it a bunch in the morning show. And good luck to the Raptors, even if, I'm not even going to say what I think will happen. But look, good luck to the Raptors today. We'll hit some swishes. But there goes Qualcomm again. So sometimes you've just got to be able to buy high, sell high. We just took out 140, and I just grabbed some out. Managing the trade is going to make sense. There's room to let it run, right? Like Arun just said, the ES just took the high. The NASDAQ has taken the high. Qualcomm had a great report. I think that bodes well for Apple, which could only buoy this thing even more. The Android handheld sales were fantastic for them, but it's got room to get to 150, and it might not. This might be a multi-day trade. Like, it might not get to 150 today. It might not get all the way up to 152, but now that we've cleared through 44, 47, this is where we could be headed. Like, when you break out, and I saw someone in the bottom saying the semis have broken out of a down channel. You're right. Like, this is what you're looking for. Always pull up that 15, but even on the daily here, Like you had the bottom channel that got broken on the daily, and then you found a consolidation with an obvious top, and you're breaking out of this channel. And next stop, this is what we're saying, 153 is your obvious resistance right in the middle of the 50 and the 200 period moving averages. So let's ride this as we're going. It's an impressive day that we're seeing here in Arun, man. You're getting the shout outs. Addy, thank you so much. Dominic, I'm with you, man. Like it's all about the different perspectives, because one of the reasons why we think this works and why we came to YouTube after it was the internal model was the value of a trading floor and being able to get different perspectives and opinions. Like a move can be happening on Facebook and you'll get like 15 traders and each one has a different thought on it, and you get to learn from other people's ideas, other people's mistakes, other people's approach to thinking about risk, without always having to spend your own capital to learn. And that's one of the values of, Sean loves to scalp, I love to be in the middle, I love the counter trend. Arun is all about essentially being a robot. Hold on to it, get your read. I've got my in, all I got to do is sit back and chill. Like I sometimes struggle with that a lot, and we all get to learn from each other. Hopefully you guys do too. I get to learn a ton from some of you guys in the chat as well. So it's a lot of fun to do this, but hopefully we get more of the main man here.
Yeah, shout out to Dominic for the super chat, but not to worry, Sean is back. Your main man's back. The 1-2 punch right here, or 1-1 punch with Brendan right there. That's going to be back here. Dominic, though, I don't appreciate the fear the deer hashtag. We don't do that around here. We only do Raptors around here, Dominic. Can't do the Bucks, but hey, they did make it to the next round there. So I guess that's a win. That's a win. I mean, they're what 5 series straight wins now. So that's what I heard, Dominic. They're doing all right. But again, there's many different approaches to trading, and I've got a very different one, and it's not for everybody, right? It's a matter of are you willing to withstand the storm coming at you, and then know that, you know what, trust in your reads and your analysis and all that stuff, and let the storm pass, and then you're doing just fine. That's kind of my approach to it, but like Neil said, there's many different approaches, and there's many different ways to make money in this market, and what you're seeing on screen is those different approaches being shown to you live. So whatever works for you, take it for what it is. Me personally, I'm not a camera. Someone mentioned it. Arun's more of a Netflix and futures kind of guy. You got it. That's exactly what I am. Not a camera guy. I'm more like a Netflix and futures kind of guy. So I'm going to get back to that next week until I think next time I'm up is back in late June or something. I know you're going camping at some point in the summertime. I know you're going to enjoy that.
Well, okay, first of all, I don't always know which camera's on, so Arun was talking, and I put the head down, and if my wife sees this, she'll be really mad at me for, you're going camping. Camping is going to be amazing. And I've learned to love the outdoors because it's so incredibly good for your psyche. And I wear a whoop, and all of my best recoveries and sleeps have actually happened when I'm in a tent in nature. So that's absolutely true, but I'm not usually that kind of a person. That's the only reason I put the head down there. Because we're going on a camping trip instead of going to an all-inclusive or something this summer, which is what normal people do. But anyways, Arun will hopefully be able to get you back on a more regular basis. One of the cool things about Arun too as well is in the middle of the day, if you guys are like, oh, hey, what's going on with futures levels? If you pop it in the chat, I'll throw a message to Arun when he's sitting trading in the den, doing his thing, and he'll usually just pop the answers like, oh, I'm looking at these 2 levels. This is what my watch is. He's chill like that. It's all good. Always, the worst thing that can happen when you ask a question is it doesn't get answered. Ho-hum. What do you lose? You lose absolutely nothing. So you might as well fire away when you can. Teledoc, by the way, that 34 level from this morning.
Fire.
Okay, you would if this was a normal parabolic stock and you made a wick like this, I would be short 33.75, but not here, not now, not when if it gets through 34, you could see some fireworks at least to this 35 level. Boom, there goes the dynamite already through 34. There is no stopping this. There was a line in the sand this morning that I would have thought would have been 30. Instead, it was 29, and the stock is absolutely gone. And it doesn't matter that most of us probably think that's one of the worst quarters that we've ever seen or witnessed in our trading history, because it probably was. But overall, Teledoc, sometimes you've just got to look for the relief rally and the squeeze. We've seen it happen over and over again. Got to take the profit. And I saw someone put in his Facebook a short now, Franz.
I think we got to go to Brendan, actually.
Oh, sorry, was it Brendan?
Yeah, let's go to Brendan.
Sorry.
We got a ton of questions around here, guys, about what is the best indicator to use for finding reversals? Well, if you've watched the show, you might know that none of us really use indicators. So we're going to break it down into price action today and talk about how you can use simple price action in the market to find when reversals are happening. There's lots of trends on a daily basis. The key is, though, being able to spot when those reversals happen.
I think that it's kind of like the granddaddy for everybody. It's like, because a good reversal, it's not just about shorting the top or going long at the bottom. It's, well, you got to run around where do you take your profit or where do you close out your position. And without getting into a lot of indicators, I think the easiest thing to look for is a simple price action, candle, wick top, just absolute rejection of a key price level. And the good thing about that is it doesn't require you to see the actual high of the day. It can just simply be a price area where a big turn is going to be occurring. And an example of this, it happened twice. And I'll use Facebook first because I think, or Meta, because everyone, today was looking at Meta, and I was involved in this one. If you don't recognize the reversal, you get absolutely burned on it. But that when the pre-market high tried to get taken out, and this stock was up 20% at the time, a massive runner, and then starting to fall off in the pre-market, and then it starts to get the juice to the upside. When this hit that top, like this wick is as real as it's going to get, you saw a harsh rejection of a very, very key 206 level. This is your gap up. It's trying to break out and rally again, and then you get this crazy wick top, and then instantly, this is on a 3-minute, instantly settling $2.50 below it, and then cannot even make any retracement anywhere close to that high. Like it wicks the high, breaks 6, and goes to $8, and then retraces right back. Like that is about as nasty a candle as you're ever going to see, and then an instant consolidation lower. This isn't going to get you, oh, I'm selling at 207, but what it tells you is if you're long here or holding overnight, that you're about to get a bit of a pullback, and that's what you're looking for. It's that type of a move for you that you're going to be concerned about, because it's not always about selling the high or getting the top wick or anything like that. Sometimes it's just about saving yourself a little bit of coinage. And one of the things that we also look for is sometimes, and I'm looking at Teledoc right here, it can also just be like a multi-pronged approach at failing at a bottom, right? Like in this particular case, what happened at 29 that we were going over just now was you had multiple breaks of a level like this where it would just, again, wick down, fail to hold above, and then reverse. And these are these shorter scalp type of moves where in the open, you get wick down, failed to break that 29, cannot hold below it for more than a second or even less than a second, and then you get an immediate reversal. And you're even seeing that kind of happen at the top here at 34 as well, where you get that crazy wick to the upside, the instant rejection of that price level, and then you get a bit of a sense of a turn. It's not going to work every single time, but it'll help you to get out closer to the highs.
Yeah. And my charts are going to be the same. I don't use indicators at all, no, not even the VWAP or anything like that. It's a blank chart. This is actually the chart that I would trade from. And you'll see me swap between different time frames. I'll go to the 60, the 30. At the end of the day, the exact time frame doesn't really matter. For me, I just want to see the structure. That's all that matters to me, because I can then tell where the volume is going to be floating around, right? And I work with those resistance support levels and getting past them by a little bit, or how are we holding up once we get past them. So Nike is going to be an example that I want to use. And this trade, the one that I'm in right now, that's doing really well, up $3.60, that trade was the multi-day setup, by the way. So you see the trend to the downside from 139 all the way to 120. This is a 30-minute chart. So this is a clear trend to the downside. At what point does it look like the trend's changing? Well, you come into this day here, this would be yesterday here, and we finally caught a bounce off the 120. We moved up to 124, try to get back down to 121 and change. Given that we put in an aftermarket low around that 120, and then we're trying to get back towards that 120 again, if we were to bounce up one more time, you would argue that, hey, you know what, there's actually a decent amount of strength. We stalled out here on the last run through this 123. We went to 120. We bounced back to that 123, 124 area, came down, went up again, came down. We're starting to find some buy-side volume. So what happens once you get above that 124? Well, you go for the long. And that's what you saw here on this chart, because There's my long. Once we got above that 124, I went for the long. It looked like the trend was finally turning. A trend that was in play since April 21st looked like it was finally turning, and then you get a move like this. So although the market may have caught a lot of people offside and surprised people that, hey, where's this rally coming from? Nike was showing you, you know what, for a couple days now that this area is going to be something to watch. Just watch this area. And we finally got that rotation north of that 124, got that pull back down through there, went for the long. There's my last exit here at 127. Well, that's my first exit actually, 127, and I've still got the rest of it here, and that's sitting at a $3.63 winner. Again, this is not going to happen in a single day. This is going to be a multi-day event, and you just got to watch them. So just go back to your charts, go back to your stocks, just pay attention to how they're moving around. Just because it's trending, it doesn't mean it's not going to turn. It could easily turn, but it's going to give you an indication that it wants to turn well before it does.
When it comes to actual price action, that's where the market is, guys. Don't worry about what indicators are telling you. Simply look at what price action is telling you. And yeah, you can still use just price action to find market reversals. Danielle Shea, VP of Options, as promised at Simpler Trading, back with us on a Thursday to discuss a very busy earnings season. Ms. Shea, where would you like to begin? Because wow, what a week it has been. Let's, I guess go right to Meta, because that was the latest and greatest out after market last night. Give me your thoughts here, first of all, on the report itself. It was okay. It was fine. Nothing, glamorous about it. But here we are, 18% higher today.
This one was really a big pain for me because I was calling this one to the short side. I did short it. I didn't lose too much money because I did it in a risk-defined way. But I'm not a big fan of this move today. Overall, Facebook, I think the report, it really wasn't even that good, which I think is the weirdest part about it being up so much. That can definitely happen on earnings sometimes. This is one of those cases. For me, since I went into it short and I've been shorting the stock for a while, what I'm looking at is the fact that, yes, it's up, but it rallied directly into resistance. And if even a stock like Tesla can't hold a rally post earnings on an amazing report, I'm still thinking that I'm going to get another opportunity to short it in the next couple days here.
When it comes to that idea, we've had a lot of people kind of on that same page. When it comes to that idea, are we waiting for some sign of, or some sort of sign, I guess is the best way to put it, before, putting on a short side trade, or do you just try to maybe find a top at some point?
So generally what I do is I just combine key areas of resistance and key psychological targets like, 200, 205, those are nice round numbers. So I try to overlap some key resistance with those targets. And then I really wait until it starts going in that direction. If it's still going higher, obviously I'm not going to try to jump in front of it. But when the momentum starts to roll over, that's a moment in time where I would start to get in. And I don't know, could be today, probably not based on the short squeeze today, but maybe sometime next week can jump back in on this one to the downside.
Yeah, back to, right now, session highs essentially for the S&P as we sit here. Okay, big ones tonight. Apple, Amazon, after the close tonight. How are you playing them?
So when you look at Apple and Amazon, we are seeing a big impact on the NASDAQ right now based on Meta's report, but Apple and Amazon are even more important. You've got Apple as the #1 weighted ticker in the NASDAQ. So what this does is really going to make or break this short squeeze here. It could, if we have a fantastic report, yes, we could continue to see a massive short squeeze until all the short sellers get out. Both of these, honestly, I don't feel strongly bullish or bearish about either one. I'm a little bit more neutral on each just because I feel like, there's been a lot of headwinds this quarter. I would not be surprised if, inflation's an issue, transportation costs are issues. You've got China, that's going to impact Apple as well. So when I'm looking at both of these stocks, I'm leaning more to the bearish side, but not enough to short them. So I just want to wait until tomorrow. And then if we get a great move, I'll trade a short squeeze higher. And if not, I'm going to continue shorting to the downside if the reports aren't very good.
It seems like, we're getting to a point maybe in the overall market where, a okay report is enough to, do what we've seen today. As we had on our board there earlier, even Pinterest up 12%. at this point as we sit here this afternoon. Let's go to the other end of the spectrum now. T-Doc. I mean, there aren't enough words to describe what has happened to Teladoc from the highs that we saw going into the end of last year to, I mean, what was it, $31, $32 this morning got touched?
So, I did short that one in the options market, and I did come out really well on the right side of that one. And so, between that and Facebook, I mean, I guess it's all right for today. But, with this one in particular, the pattern that traders have to look at, and I would say the difference between Facebook and Teladoc is that Teladoc's not making money, like Facebook, yes, it was in a downtrend. People hate Facebook, whatever. But the reason why, Teladoc and a lot of the other more recent IPOs that are coming up could have moves like this is because so many people got into these stocks when, we were thinking, oh, the growth could be great. Maybe they're going to be the next best thing. And way too many people bought in at these highs. And so as earnings come out and it becomes very clear that, hey, guess what? They still suck. That's when they're dropping. So Robinhood's actually one that I'm looking at for today. I don't know if I'm going to short it. I haven't really decided yet or not. But again, it's another company that people were kind of piling into at the highs. You've got 3 quarters in a row of bad results. They're losing money. They're probably still going to be losing money. And I would have to bet after the market action the last 3 months that there's less people getting into the market. So we'll see what happens with that one today.
There's been a little more focus and a little more attention this week, specifically kind of back on some of the pandemic stocks, if you want to talk about them that way. Teladoc, one of those. I mean, pick one. Zoom, there's, even Spotify, if you go that far, all down just unbelievable amounts from the highs. I mean, you put out an interesting tweet this morning that I saw that poll that you had on Twitter went in one direction very quickly about Teladoc and whether or not it was a buy at some point. Is there something in that kind of group in general that you can kind of pull out and say, maybe it's time?
I honestly don't think it's time to buy any of those COVID stocks yet. I mean, I know people have been coming in and, funds like came in and they tried to buy Netflix and then it tanked again. I mean, I personally just don't see it yet. I think that all of the COVID stocks just have a really unique problem in which so many people came in and bought them at the highs. And because they're down so much, they're losing money. And so it's just one of those things where until everybody who's willing to bail has bailed, it can't go higher. And with the downtrends, I mean, I'm a trend follower. So I'm going to follow these trends to the downside. And on a day like today, especially when the market's rallying like this, it's gotten to the point where it's been really hard to even short any of these COVID names because they're on the lows. But if we get this short squeeze rally for a couple of days, I mean, we'll be primed, set up to short them into May. But I don't know when we could buy them, but it's just not yet.
All right, let's go to Twitter here. The Elon and Twitter saga continuing. There's more and more kind of what ifs, it seems, lingering in the background to indicate that there might be some justified negativity around what could happen potentially before this deal does get done officially. I mean, we've had a lot of questions as to, is there a trade here, towards that 54.20? And if so, how exactly can you structure something when you really don't have a, full understanding of what could happen potentially?
You just control your risk. I mean, a lot of people have been asking me about this because they want to know, why isn't it trading at 54.20? And I mean, for me, when I look at the stock, it's just because of all the negativity, right? I mean, I'm a huge Elon fan. I'm very confident the deal is going to go through. So I'm not really concerned about, the noise. There's always going to be people that like to tear him down and say, oh, he did this or he did that, or he doesn't have the money or whatever else. But I mean, as long as it goes through, it will go to 54.20. So it's one of those things where if you think it's going to go through, you can just buy the stock. And then when it gets bought out, you get your 54.20 a share. Now, of course, if it falls through, it's another situation. But that's where you have to just control your risk and decide which side of it you're on. But I think it goes through.
Now, from the other side of the conversation here, Tesla under pressure again today. I mean, a bit of a bounce here, obviously, late in the day. But, I mean, what a fall we had the past couple of days now for Tesla shares. Is there, from an option standpoint, a short opportunity there?
You know, just as a general rule, I never short Tesla because I love it. And it's one of my favorite stocks. If you really wanted to do it, it does have a technical setup right now. Usually if I'm going to short something, I look at the daily chart and I look at the 200 simple. And whenever you have a ticker that kind of falls off of the 200 simple, that's usually a really good flush point. Now, looking at Tesla, it's sitting just below that price point. That price point would be at $900. So if you really wanted to short it, you know, you could sell call credit spreads at the $900 strike price. For me, I don't short Tesla because when you look at Tesla, Tesla is typically one of the first stocks to rally hard when the market does rally hard. I know it's been a little bit soft, you know, based on the Twitter news and everything else, but that's why I generally just don't get in front of that train.
And it's not something that, you know, we really have a full understanding, I think, of yet as far as the relationship between Tesla and this Twitter and Elon deal. Before we let you go, let's just a general overview here. You know, we're now through the biggest part of this earnings season. As far as the market's concerned, I mean, we've bounced a couple days in a row here now, but pretty important levels to deal with on both the S&P and NASDAQ.
So, you know, looking at the overall market, I mean, I think that the worst part about this earnings season is that even though we've had a couple different stocks that have rallied on earnings, you know, take Microsoft, for example, even though they have rallied slightly, they're still under so much key resistance. And I mean, the little blips that we're seeing on earnings, I mean, it's not going to correct the overall downtrend. So in order for us to actually turn and go in the other direction, I mean, it would have to be something a lot more substantial than this earnings season. And when you're looking at, you know, going into next week, we've got the Fed, we have May seasonality that's normally to the downside. So, I mean, short squeezes are fun and you can definitely trade it to the upside. Whenever I'm looking at a short squeeze, you know, I'm typically looking at NVIDIA or AMD or Microsoft or Tesla or just trading the Qs, but just don't, you know, get tricked into thinking that the low is in, because the market overall is very weak. And once we get through this season, especially into next week and the week after that, that's when we have all the more, you know, volatile stocks reporting earnings. You have all the recent IPOs. And I mean, I don't think that's going to go very well. So just, you know, take it one day at a time. I personally stick with the longer term trends. But I think there's going to be a lot of action next week, especially probably to the downside.
And as you said, more macro concerns as well, with a half-point hike, it would appear, coming with the Fed next week. In fact, Danielle Shea, VP of Options at Simpler Trading, thank you as always. Best of luck with Apple and Amazon tonight.
Thank you.
Great look there, guys, at what has been a pretty crazy week for earnings.
Yeah, 100%. And when you short Teladoc and ride that one to the downside, that's absolutely crushing it. And Danielle doing a fantastic job there. I mean, the whole thing about keeping it simple, like if you were looking at like a Tesla, just don't try to get too crazy with it. Like that 200, it has been really interesting off that level, especially here today. That's where we're bringing it up. But you know, overall, I cannot get over the rally that Tesla has put on this. If you had told me at about 9:40 that when we came back on in the afternoon that Tesla would have a shot at 900 again, I would have laughed in your face. I would have made some outlandish comment about if that happens, then I'll put pineapple on a pizza and eat it for you guys in the afternoon show. And that's the funny thing about it. Like,
We should have done it, damn it.
it's kind of jokes, because when there's those low probability type events in the morning, yeah, you throw it into the chat. I'm just like, yeah, get the heck out of here. That's not happening. I'll do this or that, because it's fun to do. Like, I would never have thought we could have got here. Like, there's a few other names out there that I think I would have said, yeah, I can see us making a bottom and recovering that far. But after yesterday, I'm a little surprised that Tesla even got through 860 the way that it did, let alone retesting 890. Like, what an unbelievable turnaround. Like, it's green right now, green, which I know makes Miss V happy.
Hey guys, we've got a lot of love for Arun today. From Alex Diaz, we've got a super chat. Thank you for all that you do. You all make great team. Would you please add another desk for Arun?
Well, there is supposed to be another desk. I don't know if you guys want to run the camera. I've been trying to be, there's a lot of people trying to convince me that this desk, you guys, the empty desk, that desk, I'm supposed to be on that desk, but that's not happening. But here's the upside, though. I do want to say one thing. We talked about Sean coming back tomorrow. Turns out I was wrong. Apparently, Sean's not ready to go until next week. So you guys got one more day. See what you've started, Alex, with this hashtag desk for a room? You got one more day. So one more day. I'll be back tomorrow. We'll finish up the month, and then Sean will come back next week, hopefully, and start off May in a good way. Start off May with a bang, I guess. That would be the ideal way to go about it. There you guys go. That's for Sean there. Starting off May with a bang. But here we are kind of waiting on some positions. Actually, I just dumped my Apple position. I got filled on Apple. I'm starting to walk away from some of these trades. Yeah. I think the market is running a little too hot, which opens the door for a downside move when profit taking happens. So I'm starting to cut trades that are starting to slow down. Apple is starting to slow down here around this 163.5. I could be wrong, and we could just take out that 164, but I'm okay with that. I mean, I'm walking away with a decent winner here. Ignoring that accident that happened earlier would have been a great accident, but hey, we got out of that fairly quickly. We correct our mistakes around here. That 161 long, I'll take some out in front of 163. Got the rest out around 163.5. We're done with Apple. I'm also waiting to dump some Teladoc as well, and Nike. I've got some offers out. Well, Nike is actually being trailed. I'm not actually offering Nike. If we crack 127.50 by a decent amount, I'll walk away from Nike, call it a day. Teladoc, I have an offer out, and I have a stop out. So whichever one gets hit first, we're going to walk away from. But the market's running hot, and I appreciate when a market runs this hot, especially when you're long, but at the same time, as we get towards the end of the day, I got to start protecting some of these gains because, again, sell-side moves are going to be a problem. So here we are kind of just waiting for this market to kind of either break through this 4,300 or actually just come back a little bit. And right now, it looks like it wants to take another look at that 4,300.
Yeah, and that's why I took a little more out of Qualcomm myself, but it's like the Craig David song, I'm walking away. I'm not going to sing it. From the trouble in our lives, but you've got to walk away with wins when they're in the money for you. And I see that rejection of 4,300 and then was already looking at 150 on a Qualcomm here. I've got my order in front of 150. I'm trailing it as well. We get back below 149. Matter of fact, I'm going to tighten up the trail just right here just to make sure. I'm going to tighten up my trail there on Qualcomm. So it was either going to get to 150, get me out, or put the trail on, and then we can do one of these, man. We never hit this one enough. That's just to show the market is green, and it's green in a big way, and these runners are starting to work out. Because the way that Qualcomm sold this morning, you wouldn't have thought it was a gangbusters report, would you? But it was a fantastic report for them. I'm concerned that Teladoc might have already turned on us. Usually, whoops, it's still in the New York. Why is Teladoc on the New York exchange? That 34 level, that original 34 level ended up being a hard top just now, and you've already started to pull back here. So, I kind of feel like I should have taken out at 33.75 or 33.50. At this particular point, if it gets up there, I'll be perfectly happy taking that out. But I don't want this getting back below 32.5. Otherwise, I think that would be crazy. We'll power it up because I said if it got to 150 on Qualcomm there, and the futures can't get that through that 143, so at 4,300, I'm out, baby. Qualcomm, it took a while. It didn't get to 140, but the breakout was fantastic. It even gave you a dip back into the channel. And if you're wondering why I like the break and the dip, just go back to what we did at that price level. Oh, you can't see. I have to. Yeah, thanks, Fahad. But now I went too far trying to adjust to it. But yeah, this is the price area right here. Like this little channel between that 45 and 147, that's what you're breaking out from. So it's pretty valid to try to get some shares into the long. And ask yourself this question. When you're in the breakout trade, is of course now it goes through 150, and it's probably going to go all the way to 153 now that I've got out of it. But if you don't take the 147 break, and it takes out that level, and then comes right back in to reestablish that support, if you were flat, what would you do? And if the answer is long in front of 145, and you are in a 147 trade, and you're willing to put more risk on, then don't let the fact that you bought at 47, if you're willing to put more risk, take you away from that secondary trade. Just add to the position. It's like having two trades on in one. You should always ask yourself, even when you're in a position deep in the money, like when Qualcomm's at 150, if I was flat, would I want to be long here? If the answer is no, then either you should be getting out or you should be trimming some of your position. And if I would be buying here if I was flat in front of 145 and I've got more risk that I want to be able to put on, then yeah, you can add to your position in that particular situation. It's just make sure it fits within your parameters. TDOC's going to try and make that run at 34 once again. I'm not entirely convinced it's going to get there. And again, it's on the New York, Neil. There should be like a jar, and every time I type in .NQ for an NY stock, I should have to put a quarter in, like a swear jar.
But TDOC's hard though. Every single time I've pulled it up, I've typed in NQ first and then went over to NY. TDOC's not one of those typical names that is in New York.
Right. It's a tech. It's a disruptor. It's a disruptor. I'm only laughing at that because it went from 310 to like 300, man. Like it is what it is. Like it's. And you always think of the NASDAQ as being those like tech and growth types of names. It's just that's a legacy thing. It doesn't really matter anymore. As a matter of fact, when it comes to IPOs, recently for a lot of those types of disrupting unicorn type names, and that New York has probably been doing really well to sort of change that narrative. But either way, that doesn't make too much of a difference. If we can't get through 34 here, you got to take this trade off. 34 could just be a scalp breakout trade on itself if it's able to get through. So we can always take more shares on a 34 break, knowing that momentum could carry this even higher. If 4,300 happens, I'm curious. Put you on the spot here, Arun. You said 4,305 needs to break, not 4,300. But if it goes, where's our upper limit here?
We don't have one. We don't have one. Straight up, it's the reason I say 43.05 is because we've, let me pull up the ES futures here. We've gotten here, we bounced here around, what is pre-market on the 26th is about 0350, 43.0350. There's probably some flexibility there. We'll call it 43.05, big round number at 4,300. Stops go off. Some people don't look that far back and they just use that 4,300. So I can see stops going off and then stalling out in the next 2 to 3 points. And if that were to happen and we were to come back underneath 4,300 again, it's going to be a problem to the downside because then I can see sell side activity coming on board as well. So you can see on my board, I've gone from 3 positions to 2 positions. I've dumped Apple on the way up. I've dumped TDOC here in front of these 50s. Again, TDOC was, we were talking about TDOC earlier. Somebody was saying 35, and I was like, you know what, somewhere between 34.50 and 35 would have been a decent level. Or an area to watch, but then TDOC just snapped up there, so I gave it a chance to actually keep going. I'm like, hey, maybe we can cross 35. Turns out TDOC decided, nope, we can't. We've got some selling up there that needs to be done. This could be, as someone said in the chat, this could be an overnight run on shorts here if we were to continue this trend and aftermarket. So this is definitely something to watch. I just want to cash out now, and I could be wrong on this, and this thing can go another $2 to $3 before the time we close. But at the same time, it is time to start taking some profits here. I've done everything I possibly can. The only one left is Nike. As this market is stalling around 4,300, I'm cashing out as much as I possibly can while giving it a chance to run. But TDOC is just the one that, for me, it's like, if I don't take it out here, that means I got to move the stop all the way down south of 32. Do I really want to give up another $1.50 when this stock has been this hot? So I'm odds are, the way it's moving, I'm probably wrong about this, but hey, money's money. I'll take it. I'll walk away from it. And in the chat, I see you, Mookie, asking the real questions, the important questions. Why does Rune wear the collared shirt at home but comes to the studio in a hoodie? Because I wear the collared shirt for 2 minutes when I'm on camera and I trade in a hoodie. Got to be comfortable when you trade. Always, always, always. Got to be comfortable. And it's cold up in here. And Neil was up and down with his sweater because he was hot, he was cold, he was hot, he was cold because of the way the draft flows through this desk.
So, like, you're absolutely right about that. I wore a sweater in the morning show, and it was cold. However, it's now, like, warm in here. I don't even know what you're talking. And why is Victor in his jacket? Like, completely invalidating me because Victor and Kush both have like their jackets on. I think because there's a draft on that side. But either way, the sleeves are rolled up, like, and I guess it does look like Kramer when you roll the sleeves up. That's not intentional. It just got a little warm. But I just trailed out of Teladoc as well, and yeah, of course, like the second I get trailed here at 33.5, it looks like we are testing that 34, but sometimes it needs to be case closed. We're into that last 37 minutes of the day. It has a chance that if it breaks out, you can always get a squeeze. The one thing that is not testing those highs, and by the way, just to go back to Qualcomm for a quick second, you got to pick yourself an out sometimes because even if I didn't take it out in front of 150, I'd just be getting out here when it failed the 150 break, and I'd probably be taking out a good 60 or 70 cents lower. It looks like Qualcomm just made a top 4,300 couldn't hold. Qualcomm made a top. Tesla just made a wick high a few minutes ago, maybe 15 minutes ago, off of that 890. So there's a few signs we could be teetering a little bit here. Facebook, which was, of course, look at this out. Took the break at 7, and then look at that trail out, and then it actually went to dollar. However, I'm probably not getting out of Facebook at 08 anyways, right? So I'm going to lose on that last long. I'm looking for 10s. Facebook, that's your 50 period. That's the current high of the day at 208.50. And this is already pulled back $2 here. You know, if we reverse this on Facebook, you're talking $200 potential, especially if the market takes off. Takes off to the downside, so I guess falls or makes an overall reversal off the levels. So Facebook is kind of sitting pretty for a short, and we've gone both directions on this name. Been more in scalp mode in Facebook than maybe some of the other trades that we've been on. But when I also add in the fact of that 50-period moving average, I'm looking for one last pop. I'd love to see one last pop that I can fade off the high in Facebook, as opposed to just taking a breakdown. A breakdown here, trying to put on $3 worth of risk at this late in the session, it doesn't really work out. Like, I think you have to have a better risk to reward. Sure, it could get to 200, but that's asking a lot in just 35 to 40 minutes. The risk reward isn't perfect. One more pop, and I think we'd have a shot at the Facebook short here, to be sure. And for anyone that is checking in or checking out that that OST stock, if you're curious about what eventually happened to it or what it's doing, why is this not flipping? Or what it's doing, it's just hanging out at $4. It looks like even though the volume is continuing to be solid, it's pretty much dead. And this is why we always talk about take profit. Down 90% on the session. It started at 4. It got to 48. It's going to end at 4, it looks like.
Yeah, I didn't realize this until Bradley Taylor brought this up. Qualcomm? He was talking about the reversal on Qualcomm, but then I just pulled up the chart. I'm like, what? Qualcomm got up to 151. I saw the alert go off. I'm like, I'm already in longs. It's too late for me to step into this. But damn, 147 gone all the way north of 151 to the upside. There goes the breakout. We were talking about this.
Why didn't you want that one?
It was too late in the day for me to start stepping into brand new longs with the market this tired after running so strong, right? That was my whole thing. I was like, I've got longs that are priced really well. Do I really want to put up the risk on Qualcomm as well? So I kind of just gave up on Qualcomm. Another one I actually gave up on, again, this is just me doing risk analysis on the fly here because I'm already priced in well on a bunch of longs. I'm noticing the market is getting, it's been running for a while. It's getting tired a little bit here. Doesn't mean it's going to stop, but I'm just saying it's getting a little tired. You don't want that kind of a situation where you're going long just as the market's starting to stall out a bit, right? Even if it's hesitating, it could stall out. So my whole thing was Qualcomm, 147 break could have been a nice trade, but a little late for me. And then the other one was going to be AVGO north of 576. That was another one, Broadcom. That would have been, and again, that was a strong trend too. Pretty much from noon, we were just trending up from 561-ish all the way up to 576, which is where the entry should have been. And then it's still going to 582. I don't know if you could have saw that coming because I couldn't have seen that coming. I would have preferred a pullback after doing this. And also, this kind of break early in the morning, or mid-morning, early in the morning, that's when I tend to position up in the majority of my trades. A lot of late session moves I kind of don't get involved with because I just don't think I have enough time for it to get going. But there goes Broadcom to the upside. And you know what? Broadcom sets up another trade. I'm apparently here tomorrow, so we can definitely look at Broadcom tomorrow and see if we can't find a trade there. Qualcomm's an option. But at the end of the day, we say all of this with a big caveat being Apple. Is Apple gonna do something crazy? If it does, all of this goes out the window and we've got to reassess in the morning. But for now, we'll go to Miss V.
Hey guys, Tesla is up almost 1%, and I love to see that at some point we were down more than 3% on the day, and now back to the positive territory. So let's go Tesla, and I hope, guys, you caught that move to the upside. Also, we've got a super chat from Julio Hernandez asking, short Apple. Again, guys, Apple is going to report its earnings after the close. Positive day overall for Apple, so maybe we can talk about that name again.
Short Apple,
you know what's interesting?
Brave move.
Oh, dude, I actually already had
fries.
Oh,
look at Pratt being the delivery man and giving Neil his fries, his super chicken fries.
I should have told him because we went to Jeff took us out for lunch and I had this like crazy fried chicken sandwich with French fries and it was like, I'm gonna eat them, but I'll have a couple, but give the rest to the other dudes because I can't say the word, but let's just say that if I didn't have a little bit of extra caffeine after the lunch I had, I might be falling asleep right now. But I can't say what that is. Apple, look, if this was, and I'm looking at Facebook, if it popped, I'd fade it, right? And looking at that 50-period moving average. And if it was any other stock, and I'm actually convincing myself that maybe there could be a risk-off event going into Apple as well, just going into the earnings. Have a look at this top. This isn't a horrible, it's not a horrible level when you look at it on the 15-minute, and your stop is pretty tight. Like, I had to pull it back on the 15. I realized I wasn't showing it all. But if you look at this, this is not a bad price level, this 164 here. Now, it's broken. It's tested it exactly to the penny. So what I would want to see here, there's about 50,000 shares on the offer from what I see. What I would prefer to have it happen, and we're not above 4,300. That's key. Like, you don't want this to be above 4,300 on the ES and breaking out of that level. I'd rather see it break 64s here, trap some longs, because there's people that are going to be bullish. You know that, right? You saw what Facebook did going into earnings for the last hour of the day. It was just screaming to the upside, and then it blew it out. So if we're taking out this top and people chase that long, and then it dives back below, I'd rather short that instead of stepping in front of the 164. Good look on that camera. That is just cool as ish, guys. Like, I love when you guys do stuff like that. It's a lot of fun. But yeah, I want to see a failed breakout on Apple. Otherwise, give me Facebook that's overextended up 18% and give me a short off that high as opposed to Apple in front of earnings. But there is a setup for a failed break at 164 to short.
Yeah, I see you guy at LAX saying that, where's my fries? No, Brad knows better. He doesn't bring me fries. I eat clean. I'm a clean eater around here. I actually got a nice little salad to eat with as Neil tries to, say, fries. But no.
You know, the joke about it too is like, I talk about how I don't eat clean, but you and I, every other meal that isn't like here, like I eat really ridiculously healthy, so when I do indulge, it's like...
Oh, he says that, but it's hilarious because his midday snack is like usually a brownie or some sort of crazy sweet. Maggie gave him a box of cookies the other day. He's just like so happy. You feed this man sugar, he's going to be so happy about that. Yeah, thanks Maggie for him, because you didn't bring me anything, but that's cool. That's cool. But hey, it's all good.
I offered you a cookie.
You did offer me a cookie, but it's about Maggie at this point. Maggie didn't bring me something. I don't know, like a rice cracker or something. I don't know, something healthy. But market, here we go with the market here. Taking off to the upside, 4,300. Is this happening? Because now this is like the third or fourth time we're trying to get here. Third time we're trying to get here. And trying to make a move. Can we get some stops going? Can we get a stop going north of 4,300? I think that'll say a lot. TDOC is starting to stall out, so I feel a little bit better about that exit here around that 3,350. So, we're good with that one. And then Apple actually is continuing its move. It makes sense. With Apple going up, markets going up, so I guess it makes sense that Apple's now starting to look at that 64. Remember, we got out just in front of 50, so we are going to pass up some profits on the rest of Apple, but hey, we need to shed some risk this late in the day. I'm okay with it. And the only one we're going to carry is going to be Nike here. Nike's still going strong. We're going to let the rest of it ride. Right now, it sits at a $3.80 winner on Nike. A trade that started at 10 a.m. this morning. 5.5 hours later, here we are, $3.80 in the money. Sometimes, with me especially, a short trade is like 2 hours. A normal trade is probably like 4 hours. And then a long trade, what I would consider a long trade, would be like an 8-hour trade, which I've done before, which is like an 8 a.m. entry on the futures, getting out at like 4 o'clock. But again, time frames are very different for a lot of people. And there goes the futures level of 4,300. And there goes Apple.
Yeah, I think the key thing with 43 being taken is it actually needed Apple to hold above that 164. And that's why I sort of favored the whole failed breakout idea, as opposed to standing in front of the freight train. Like, you got the ES at the high, you had the NASDAQ, chilling out already, sort of breaking out of that high. There's no need to be in the short before you get a confirmation that we're failing at this price level. And once it happens, yeah, you can jump into it, guys. That's what it's all about there. And thank you, Krishna, for Teledoc. And save your day. It's just, to be perfectly honest about it, like I myself was thinking only shorts as well, and then you got that reversal pattern. Sometimes it's what it's all about. Like, you can have a read on the stock and have all the reason in the world to believe that the stock is going down or should go down, and it's going to do what it wants to do, and you've got to be able to trade that price action. I might not have been in that. I might have been sitting there, waiting for my dip buy in front of 30 even, and then only taking the 32 break and then missing out on the first dollar of the move if everyone didn't talk me into well, not really talk me into it, at least say, well, that trade is the same trade, basically. So just you might as well just get in now, and then ended up doing so. But that's what you got to do. You got to be able to open up your perspective a little bit sometimes. I still think there's a chance. Well, now the market's really going.
Yep.
Yeah, I was about to say, I'm like, yeah, now the market's really going. I was about to say, I think there's still a chance, if we're not still screaming, that we could reject this on Apple and get back below 164 and some selling into the close, but not with what I'm seeing in the futures and how strong this move is. Now I'm just sort of kicking myself for getting out. Like, Qualcomm's still holding up to have said this made sense to get out in front of 150, but that's about the only thing. Like, at this point, I almost feel if the market rolls back over, Qualcomm feels like a pretty solid short at 149. But I need to see us rejecting this 4,300, maybe the NASDAQ coming back under the 4% mark. Tesla gets pretty interesting as well because it's failing to break out when we get through these highs and we're now churning. So another name which is pulled back, giving you that wick top, is now consolidating. But you need the market to turn around. Shorting any of these things in front of the imbalances when the market's still breaking out, I think is a little bit crazy. But the only thing we could have done is hung on to some of those longs. The one name I will step into the short, however, like we said, Facebook, that 208.50, that high of the day, that's your 50 period as well on the daily chart. This is going to be worth it to take a shot shorting into the pop. But we were patient saying, allow it to start to come to us. I didn't want to short it at 05.5, that far away from the high of the day. I'd rather take it as we start to get closer here, and I just actually got in at 40s in front of that top. Like, instead of risking $3 with a half an hour to go, risk $1 because time is against us. We got to be flat at the end of the day, which means you want to tighten things up a bit.
Yeah, me tightening things up is what kept me from this $1 move from where I got out on Apple here. Another dollar. Apple accelerating to the upside as the futures takes the 4,300. But hey, at the end of the day, we knew this was a possibility when we got out, right? The fact that we're cashing out, giving up the potential for a continued runner, but with the market exhausted, slightly, not exhausted, it's just like, it is hesitating a bit. So it makes sense to lock in some profit, but clearly the leader right now, Apple, 5% to the upside, Amazon right behind. Actually, that's not even the leader. I take that back. Facebook is obviously the leader. We're going to have to put that aside. That's 18%. But NVIDIA is the leader, 8.7% to the upside. And then you've got Amazon there, and then Apple kind of in third place with 4.98% now. But clear, strong runners to the upside. What you got to watch out for in a market this strong, what's not keeping up? Remember, we've had some trades this morning. We had one trade that did not work out, that blew us up this morning, was Caterpillar. Remember, we went for the long here early on Caterpillar around that 209 half area, and it broke right through that 206.60 right as it was opening. I was like, damn, okay, that wasn't fun. So that move has turned back around, but Caterpillar is still down 0.74%. That's relatively weak given what it's done. Now, there could be a trade to be made tomorrow around that 214, but at the same time, Caterpillar not doing well in a market this strong. And the other one that's lagging behind, Boeing, BA, down 0.05%, pretty much flat. We've got a breakout long set up around that 158 level, but Boeing, for everything that this market has provided, Boeing refuses to actually get going even towards its highs. It is not even looking at those pre-market highs yet. So definitely keep an eye on Boeing, because now with a weakness like this, you could open up the downside, which is going to be 148, potential breakdown long, breakdown short, or the 158 breakout long. So this is exactly what I was looking forward to, Neil. Is remember I said 43.05? I wanted to see how this 4,300 reacted. We could easily break up, hit stops, come back down, and if that was the case, we could open up some shorts. I'm not going to take them, but I'm saying it gives you more confidence in actually taking some of these positions out. And it seems like this market's backing off through these 4,300s. If this sustains, then you might actually have some selling coming in as we get closer and closer to the end of the day.
Why can't you just take them? It looks like for now, and I should be knocking on wood here, like Facebook's starting to turn around a little bit here, so it looks like it's trying to put in that lower high. Now, if it gets back, when I got trailed out of the long breakout, this 205 in a quarter, well, it's actually 35. I kind of look at this level that it ended up holding again. So it was a wick bottom and tried to take the top, and then it was just the last resistance into the higher low. That's a scalp all day long. If this was not 330 and we were earlier on in the session, I'd only be thinking get some out at 204, 204 half. But because it's tighter to the end of the day, I will throw a bid down, in that 205 high range, just to make sure we are locking in some profit. And I think we can go further than that, but as we get closer to the end of the day, you start tightening up even the outs. I still feel like we could flush. I mean, I get it. Like I know the reasons why going into this, at the end of this day, as strong as we are, you think we can break out even further. But just because of Facebook, it won't take much of a pullback, in my estimation, in the overall market for Facebook to start giving back because it's up so much on the session and has been resisting the highs. When the market's making new highs, Facebook is not taking out its high. And it's also that 50 period. So this is the one short that I do like. QCOM I was sort of saying you could, give me a break. Did you just lose some of the data? I love when these random gaps just show up. It looks fantastic. But yeah, Qualcomm, which I was just telling you, and when that happens, I will just go and show you my black chart because it's working. Yeah, I was saying this is another one that you could have gotten into because it made that crazy wick high on volume, then rejected 150, and you had the sideways action. So I could very well have just been in this short as well at 149.25. I elected for Facebook. And maybe I could have taken them both, I suppose. That could have been the better way to approach it. But either way, I took Facebook instead of Qualcomm. I'll get off of this chart because it's ugly. And maybe we'll get that first out in just a few seconds here. If we can take out this 206 level. Remember, we want the futures to reject. Neither the ES or the NASDAQ has really pulled back all that far. So it might actually make some sense to step in front of 06 instead of on the back end because we're getting this move without any kind of a pullback in the futures. So we'll go ahead and I don't know which one I want to hit here. It's just like not look a gift horse in the mouth. Quickly take the $1.25 on Facebook and then let the rest sort of run here. It is 3:30 after all.
Yeah, and that's the thing with this market. You said, this market is just pulling back not that much. The problem is it's so fragile with the way it's trading around this 4,300. And that's why I marked off that 4,305 because of how it was going to react around these 4,300s. If we got something like this, it could open the door up. I've seen this so many times. After you see certain behavioral patterns in the market, you kind of understand what's expected. And keep in mind, I've been watching this specifically, only this instrument for over a decade at this point, right? So I understand certain tendencies, and this market has that tendency, especially after a run like this, has a tendency to play this game, which is run stops north of an even level and then snap back down. And now we are coming back down. Doesn't mean we're going to sell off, but I think if we crack 90, and we are getting closer to 90, if we get underneath 90, we can open up some doors for some profit-taking sells. A lot of people that are doing well on the day or are up decently on the day that are intraday players may want to get out of the way. If you're willing to hold on through these Apple earnings, then that's a different story. But if you're intraday and you want to cash out, what better time to cash out than around a round number, right? So that's what you're dealing with right now as the market comes back a little bit. I think the next window would be 90. Doesn't necessarily mean it's going to sell off all day. We could just have another. If we were to take 90, we could fall another maybe 10 points or so and then catch a bid and then take the highs again later on towards the actual close. But for now, the market coming back, we're already out of Teladoc. So Teladoc's positioning exit was stellar. 33, just in front of that 33.50. Looks good now. For a second there, it didn't look the greatest. But again, 2020 hindsight. But again, I saw something around this level. So I'm like, I'll give up whatever I could potentially make by just getting out now. And then we got out of Apple. Apple, remember I was like, oh man, Apple's like $1 past where I got out. Well, now it's coming back into the south of 164, into that 163 area. So again, good exit there. And then Nike's the last one I've got left. And that one we're going to get out of fairly soon. It's sitting at 127.50 and change. A little bit more. I'm going to try and squeeze this one out just because I want to see what the imbalance is on Nike. And that's about 18 minutes away. But if it falls another 10 cents or so, 10, maybe 15 cents or so, I can walk away from that. I can be happy about walking away from this because I tried. But my Nike came back a little further than I would have liked. And it's time to cash out. Do what the market's telling you to do. And if the market wants to break some levels towards the end of the day, there's no point in holding out hope for these imbalances to come out in favor.
Oh my God.
Someone in the chat said I should have hit that key instead of the gift horse. So there you go. I'll hit the oh my God. Not for your comments, which I think were fantastic. And I love they out on Teladoc. And giving Nike some room made a lot of sense to me. Benjamin asked in the chat, I'm only going to say this, I know we answered in the chat, he was saying he looks at the spot, like the S&P, the SPY, but he wants to look at the NASDAQ. What can you see? There's always the Qs, like the triple Q. A lot of times, and I'll clear this one up right away, most of the time when Sean and I say the market, we end up meaning the NASDAQ. And when you say the market, you're looking at the ES. It's a distinction that we should probably always clarify because you can watch one or the other. The one thing you will never hear us, almost never hear us refer to is the Dow, because it's like a legacy thing. It's not really all that relevant anymore. People just talk about the Dow. It's just the way it's weighted and the way it's made up is a bit archaic, and it's not that. It doesn't matter to the movement in the market most of the time. But we'll talk about it usually at the end of the day. But I'm usually watching the NASDAQ. Although I'll say 4,300, so it's obvious that I'm talking about the ES for those levels. But usually if I say we're breaking out, it's on the NASDAQ. Tesla was the other one. And I should have just taken Qualcomm. Obviously, I chose Facebook, and it's fine, but I should have taken Qualcomm. Tesla as well, the names that had put in an earlier high, and when the market was breaking the top, was putting in a lower high, just like Facebook, just like Qualcomm, and now starting to roll over. Not as much follow-through and still green on the day, but we're now getting a bit of a turn here. And speaking of that NASDAQ, this is it. Like, look at the wick tops. Now on your 15-minute, you're putting in a bit of a red candle for 13.5. So if you got your shorts, hold on to them. I wish I had all three. I only have the one. But hey, might as well let it run, hopefully into these imbalances. I don't even want to have a take profit because once you've scalped a piece out here inside of the range, if it breaks, I mean, it could go to VWAP. Or I'll just run it right into 350 and see what happens with the imbalances. As long as we don't take out the high of the day, the trade is certainly going to be valid. And I'm almost just kind of reading the chat here. Friends, like, I sure like your shorts. I wish I was wearing shorts today. When we got taken out for lunch today, we're staring at the patio, and it's like, why are we not on a patio? Because it's cold. It's still cold here. It's ridiculous.
Looks
like,
nice, but it's cold.
There was like little faint bits of snow on the ground earlier this week when I woke up in the morning, and that should not be the case going into May, but it's Canada. What's up, Brendo?
RCMT, which has been on the move today after earnings as well. This is a construction company. Oh, wow. 6 million float on this one, guys. Just took out the highs. So 43% here. Just took out 16.5. Quite the move here for RCMT.
Neil's comment just, explains Canadian weather for you. You don't trust it until, for sure. For me, it's like mid-May when I'm comfortable with the idea that, this warm weather is going to be here to stay. So mid-May going onwards for me. But my winters are still on the car. Although it hasn't snowed in a reasonable way in a while, I'm going to take it off. I'll take it off in the next couple weeks or so. But again, as the market falls off, my winters are still in the car. And it's still cold outside. So it should warm up soon, but hopefully May brings better weather. It's nice, but still cold. And futures market, okay, I see you. You're coming off a little bit. I know you got the Facebook short, riding that nice little position. Did you actually go after it after it broke the 4,300 and came back down?
That was sort of the key. I was looking at Apple, but Facebook, it's so much easier when a level break like in the futures happens like that to short something that couldn't even get to the high as opposed to trying to something that broke the high simultaneously because that's relatively strong, Apple. Whereas Facebook was relatively weak in that moment. So was Tesla, so was Qualcomm. It's weird. I'm actually thinking to myself, I probably didn't take Qualcomm because we like to break out long. If I didn't have that long trend, I'd probably just jump into the Qualcomm short off that 49 level in addition to it. But yeah, it's just... This pullback, I'm not saying it was inevitable, but it's like you were saying, like it was running hot.
Yeah.
And so you're thinking taking profit on your longs. I always like shorting off the top. Like it's a strategy I'm all for. As a matter of fact, I'm looking at RCMT, and the first thought on my mind is, was there a reason to go short? However, when something like this runs in this fashion, it's a little different. You know what I mean? And when I look at the liquidity, it's not a ton of liquidity. It's a very, very bullish chart. I'm not thinking about short today. Maybe there's a short tomorrow, but I'm not really seeing something that I want for RCMT. And it might turn today, but I'm not seeing any short that I would like to trade. Brendo?
Big mover from a couple of days ago, just trying to make a run into the close as well. VIVK, if you remember. It was yesterday we were looking at this. It was up big time. Big volume spike here for VIVK. Trying to go positive as well.
I remember you, and I keep calling the stock Vivek because one of our viewers, who's been watching for a while, is named Vivek, and I see that chart and I see VIVK, and I'm thinking to myself, wow, that's got to be the one. But this stock, if you look at the 15, it's certainly got some. This, for some reason, I don't want to pull back any further, but it's got some room to go before I'd see a rejection. It's at that $4 level, so we will take a quick look at that when we do get a chance. Like maybe it does get to 4, but that's where I think the turn could be. It had a harsh rejection of that price just yesterday.
Yeah, at this point I'm flat, so I'm just answering questions from the chat. Bradley Taylor, yes, I am going to Europe later this summer. I'll be in Portugal, southern France, and Italy. So I'll be there. And then Ralph asking whether I had a futures trade today. Okay, so I did. This is going to be so bad too. It's so stupid. I'm a little salty about this one still. So this is my futures trade. Building up the longs this morning as the market's falling up. Right? So here I am pricing in longs as the market's starting to sell. I'm like, I'm good. I know where my stop is. It's going to be that 85 level. It's a flexible 85, so I'm okay with it. I'm not rushing the exit. So we had a whole conversation on the morning show about this. And building up that 85, market comes down. I'm cool. Market bounces right off the area that I'm looking at. I'm like, I'm cool. We're still good. This is the area that I want to catch bids. I've already priced in everything I want in these 20s, so I'm good. The market comes back to these 20s. And I start wondering, you know what? This is not, something's off about the action here because of the strong sell, the snapback, and then the fact that there's still some selling here, and it was active selling too. I'm like, damn, okay. I can either now do two things. I can either take the hit now, or walk away, take a small hit now on this long, or I can let it go back down to these 80s and end up taking the hit here. Given the action that I was seeing, I was like, you know what? It's time to walk away. It doesn't make any sense to give it the extra 20, 25 points that I would need to give it. So you see my exit right here. I took the hit here from that 25, just south of 10, just north of 15 points. And I'm like, I can eat that hit. That's fine. That's okay. But then the market decided to do that, and that's a 75-point run for my entry price. And yeah, so although I had a trade, clearly mismanagement, or even when I look at it now, I'm like, you know what? It sucks, but it was the right thing to do. Unfortunately, it just leaves a bad taste in your mouth, but it was the right thing to do to control risk at that moment in time. So although I'm sitting on a loser for this trade, I can't be too upset because in any other situation, this could have been something that saved me from a much larger hit. And this is one of those things where you just got to execute consistently. And this is part of my execution of cutting a trade when I'm starting to see information like this. And unfortunately, it didn't work out today. But again, the read was there. It's just a matter of management at this point. Valeria.
Aaron, thank you for sharing that trade. I think it's a great learning experience for all of us. And I want to welcome a new member, Deborah Yu. Welcome to the family. Welcome to the green side. Deborah, I hope you're having a green, profitable day. And team, I would love to remind you to like this video. Like button needs your attention a lot right now. Just around 20 minutes left until the end of this trading day. And please go smash that like button. Back to you guys.
Absolutely. And that's the thing about it. Like, it's the cost of doing business, taking a hit. Like, you cannot be upset, when you have a plan, you execute it, and if it doesn't work out, just understand nobody wins every single day. I would say this, like anybody that tries to tell you that they win every single trade or win every single day, it is simply impossible. I don't care who you are, it's not gonna happen. You're gonna take those hits. And as long as you understand it's the cost of doing business, the way I try to think about it is, and maybe this is the wrong way to look at it, but it's usually how I tend to think about it is, once you've determined where your out is and what you're committing to the trade, it's like that is gone. So if you're risking 20% of your shutdown, just imagine that that's already gone and you're working it back. And then psychologically, it helps you just say, okay, well, whatever. Like if you're shorting something off the high and you're looking at like an AMD, like you're looking at this thing churn, and if you wanted to short an 89, which I didn't, and I wanted to short like 88, 75 here, that 25 cents worth of risk for whatever amount of shares it is, let's say 1,000, so it's 250 bucks in the middle. If you say that's gone and you're down that amount of money, assuming it's going to be a loss, then it's easier to just worry about working the rest of the trade. Because then you're just, in your mind, you've already lost that money. You've spent it. That's your capital. Not necessarily the capital that you're putting into the trade to make it. It's more about how much you're going to lose if it hits that out. And if you can psychologically tell yourself that it's already gone, then it's a little bit easier to just put the trade on and then relax, worry about managing it from that standpoint, which is what we're always trying to do here, guys. And Thank you guys for everything. It's always a lot of fun here to be able to do the show for you, especially when we're having a nice little green day like this. However, we are still pulling back overall. I'm a little bit disappointed that it feels like Facebook is still holding up this 205 level, despite the fact we've already followed through here. It's a bit of a frustration because I think if we take this out and the market makes another leg down, we could really start to crater. But yeah, Facebook's catching a bit of a bid. In the same vein, when I look back over at Microsoft, which pulled back, come on chart. Here we go. It's actually managing to hold up, and it pulled back and went right into like what was a nice consolidation, and it can't seem to make the next leg down. I look over at Tesla, and it's a pretty similar story. It pulled back and is holding that 880 level, which was pretty key from yesterday's price action. So we've clearly gotten to a point in this dip right in front of the imbalances where if we hold, there's a point to rally from. So that's why you have to be careful with any of these shorts. It did feel more like Arun said, like a profit-taking opportunity where you can short it if you have a good high, but you've got to be a little bit careful because you could immediately find support and then start running again. Facebook at least never got to the high of the day, so if I wanted to have a tighter stop, I don't have to let it get all the way back to the high and then give everything back, and ooh, again, I've done it. If I had that swear jar, I'd be throwing it again because Teladoc, I typed in NQ instead of NY. Teladoc is a different story. It's down 41% on band earnings, so it's not having any trouble, making lower lows at least in this last half an hour time frame. It's still looking relatively weak. It's got lower highs, lower lows ever since making that fail break at 34. And that's why we talked about what is a trend reversal. Sometimes it's just parabolic move up, wick high, and then a rejection of that level. Tries to get there again, lower high, wick top, rejection of the lower high. And that's where you get the trend reversal. And we're both sort of out in the same area after reject that first top and try to take the second. But you've got to look for those types of cues. That's what's going to be important to your trading. Brennan did bring us a couple of names there. I don't really see anything that's too crazy, but I did see someone in the chat talking about NVIDIA. I was just looking at AMD. NVIDIA, which I had not been trading for the last little bit, AMD just always feels like it has better levels the last week or so. But NVIDIA, pretty much the same thing. And in some ways, this was better of a wick top short than some of the other names we just looked at because the failed break was right at 200. Failed break 200 gets to 237 cents. Comes down, consolidates at 99. So whether you're short in front of 200 or the 99 level, it's the same similar type of pullback. You got to love the day that it put in. And you had to believe that when Qualcomm had that good report, the second it got going, it should drag everything with it. NVIDIA, in the midst of trying to break out the channel, however. Come on, chart. Sure, you've got the breakout from 192, but we're not done yet. NVIDIA has to climb above 200. It's got to get above this 204 area. You get out of this 204 to 204 range, and you've got $20 worth of upside, maybe even $25 worth of upside on NVIDIA. So what I'm looking for tomorrow is A, Apple beat, please. Have the numbers be good. Regardless of how the stock works, make sure the numbers are actually good, and then we can start working this 200 to 204 area. You break 204, and you've got to give it back to 200 at least. That is $4 worth of risk on that break because there is a ton of upside. And you can see what it is. Like if we break that 04, your first levels are like 10. And then from 10, you've got another massive gap from 210 to 225. That is a wide area for you to get a break from. And someone rightfully put in the chat that you had this great bottom channel on all of the semis that is about to break. First job done here, breaking the consolidation earlier. Second job needs to get done tomorrow or maybe even next week, which is taking out these next levels and then getting the real run to the upside. And we get these nice up days, but if you don't continue it, it's a relief rally, which typically this last little bit, people have been selling into these relief rallies. You need to get into these new levels before we can actually get multi-day rallies.
And you're starting to see it now as the market comes back a little bit. Somebody was asking, is 42.90 a critical level? It's not, but it's a minor support area on the way up. So the fact that we got underneath opens the door down into these levels that we're at right now, 42.80, 42.75. We probably have a little bit more flexibility all the way down to 42.70. It could still catch a bid anywhere between now and then. But hey, in about 90 seconds, we're going to get these imbalances coming out. And I'm not sure which direction. I mean, it's been a strong day, and it doesn't mean necessarily that just because it's an update, it's going to be a buy-side imbalance. But at the same time, it's going to be an interesting one to watch, right? So imbalances here. I'll quickly go over. Actually, before I go over, someone was asking me, why didn't I get back in on this exit? Because it was a risk adjustment exit. Like it was a risk analysis exit, not an accidental one. If it's an accidental one, I'll get right back in. But because it was risk-based, I'm making the calculation that, you know what, it's not worth the risk at this point, so I'm walking away from it. Now, of course, that turned out not to be the right move, but at the same time, I'm not going to get back in because I had no other reason to get back in, right? I made the analysis that it's not worth the risk. Let's just cut the risk, cut the trade, and walk away from it. Imbalances coming out in less than a minute here. What you're going to see is this little indicator fill up with a ton of data here. This is from this morning, so let me just turn off the ARCA filter. This is from this morning. You'll see the 9:30 a.m. imbalances. All this gives you access to is information of where on-close orders are going to come from. Where do people want to officially close their stock, or which direction do orders want to come in, so that right at the end of the day, when the market specialist prints the final print, which you'll see in every other website, where does that print go off? And this will tell you where the orders, how many people are interested in buying, how many people are interested in selling. And this comes out at 3:50. In about 7 seconds, you'll see this entire thing updated. As it comes out, I'll let you guys know exactly what we're looking at here. In about 2 seconds, we'll have an update. Looks like it is a sell side imbalance, maybe. I don't know, the market's not responding. Yeah, probably a sell side imbalance. Now you see the information, live information, right? From top to bottom, you see the symbol on the left-hand side here. You got the direction, the size, how large these orders are, or how many orders need to be executed, or what the amount of shares is, and then paired values, how many has already found an opposing side. So VICI has a sell side imbalance of 2.7, but at the same time, they had a larger sell side order, of which 1.9 has been filled. So 1.9 has already been matched with another buyer, but 2.7 still needs to be sold at the end of the day. Now you take this information at 3:55, you've got to bring in the floor update, because right now this is the first release. It'll continue to update, but at 3:55, the floor will provide their interest on what these numbers are going to be. And a lot of the times, if it's not an indexing event, if it's not an indexing special day like the third Friday of the month, or quarterly, or special rebalance days, or even end of the month, these aren't going to really stick around. They're just going to kind of disappear on you. And that's typically how it goes for these imbalances. So although it's there now, unless it's large enough to matter, meaning this 2.6 million shares, if this were to stay the entire time, stock has done 22 million shares. If this 2.6 stays and the level 2 can actually handle the volume, it's not going to do anything for it. But if it's a large proportion of its daily volume, you're going to see a lot of pressure on this stock after 3:55, assuming it stays as we get into the close, as a lot of people try to see, like, oh, you know what, there's a lot of interest, let's go in front of it. They try to front run the number, or front run the buy side interest, and see if they can't then, play on the opposite side of it by sending in opposing orders, right? There's a way to play this, but it really doesn't matter unless it stays, it's big enough relative to the stock's volume.
Yeah, exactly, and all well put. I should have hit the mic drop one. But for some reason, I can't find my mic drop whenever I want to look for it. But Intel is 1 million to sell in front of its earnings. But that's a name, like, it had already pulled back with the market. And Intel pairs off pretty much every single time. We're used to seeing Intel on the imbalance locator for close to 1 million and then having it just pair off and end up being a bit of a nothing burger. So I'm not really going to be watching that. Oddly enough, when the market continued to roll over for that mostly small sell imbalance as a group, Facebook could not get through that 205.50. So where I stopped out of the long looks like it's got a support level on Facebook. Might have to log that one off at the end of the day. That you're finding buyers at the 205.5, 206 range on Facebook, and we might need to be below that price for any follow through back into 200 because it's still looking pretty bullish. And as we get closer to the end of the day, obviously going to have to take this one off. If we're going to hold this level here, I should probably trail it. For the dollar, like the 50 to 80 cent level, if we get above 206.50, like if this dollar channel breaks, it's probably retesting the high. This is a little bit strange to see us continue to fall off or pull back in the market. And the name that's up 18% doesn't want to go any further. While, to contrast it, Microsoft here is continuing to roll over. Like, it broke what was holding before the imbalances. So that's what you'd expect to see happen. Tesla, which is trying to break 880, but a little bit weaker overall as well. Qualcomm, which this was the one that, again, we didn't take. That's still have that gap there. It's still not it's still not through 148, but it's broken down another 50 pennies. It's starting to fall here. So I'd like to see Facebook continue, but it's got a lot of notable strength. And Teladoc, oh goodness. Yeah, how about that? I just did it again. I just typed in NQ. How about that 34 level, Arun?
On Teladoc?
On Teladoc. Look at it scream into 34, rejected again. So if you haven't written down 34 or put an alert for 34 or done something to alert you that 34 is going to be fun tomorrow, if we get to play off of this level, then go ahead and do that now, because I'll be watching Teladoc 34. As long as we hold this on Facebook, 205.50 to 206, I'll be watching that level for sure. Any longs got to clear that. And of course, we went over NVIDIA. AMD not really doing like nothing too crazy. Like with the rest of the market, it's pulling back here. It rejected the top at 90. But much like NVIDIA, this is a very similar story. Great move off the bottom, but AMD's got to get through 91.50. AMD gets through 91.50, and just like NVIDIA, you've got so much room to the upside. Clear runway to 95, clear runway to 98. We've done the first part of the story, but you still have a lot of work to do to get through that second leg. And of course, we want Apple to help, and we're right at 355.
Yeah, right at 355. Well, we got 10 seconds left. This will be updated. Somebody was asking quickly about Facebook. Facebook right now, 298 to sell. In about 3 seconds, we'll get the floor update. And what do we got here? Facebook's going to still be a sell at 199. Let me quickly move over to the rest of the market as a whole. So all stocks that have imbalances, we'll see it. Look at that VSCI, got bigger actually. Floor also wants to sell some here. Now they've got 3.1 to sell, 2.9, just a shade underneath 3 million has already been matched with the buyers. So they've still got another 3 million shares to sell. We'll see how this one plays out as we get closer to the end of the day. I'm gonna get this on a 1 minute chart so you guys can see the pressure. As long as this sticks around, there's gonna be some pressure on this name here towards the sell side. I do want to say one thing. A lot of people will be like, well, if they see it, if it's this obvious, why don't you just short it and see if it goes down? It's not that simple, because there's always people sending in opposing orders. And as soon as we get the update, this could instantly flip from a sell to a buy. So you got to be very careful on how you play this, because although the information is there, it's not instantaneous, because the programs jump on it much quicker than we can. So we do watch it to see how it's going to put pressure on the name, but we don't jump right into it just yet. Brendan.
All right, let's get some earnings ready for tonight. Big names, as we said, all day long. Two come, guys, aftermarket and before the open tomorrow.
Yeah,
all right, Apple.
Yeah, Apple.
See you, Apple.
You know, Apple's always late, right? So, you know, the last couple of days you've had the benefit of right away. But
actually.
Roku is volatile, super volatile. We'll watch Intel because it's another one of those bellwether names for the semis. It might not be as crazy, but you never know. I would not sleep on Intel putting a 5% move. It's one of those semis that needs to break out of the channel. But Roku, I think,
Roku's gonna be fun tomorrow. Forget about today. Roku's gonna be fun tomorrow.
Yeah, there's no doubt about that one.
All right.
Oh, by the way, Facebook just broke that channel to the downside, so we're only about 3 minutes to go. I'm going to see if it can't fall a little bit further. Obviously, we have to be flat at the end of the day. It might not get to VWAP. Well, it's not going to get to VWAP at this point. That's too extreme. If it can get closer to 205, I'll just take it out there. But you know, that top did work out. It was relatively weak. When the market was making highs and testing 4,300 the second time, we were putting in a lower high here on Facebook, and that's what made it an easier short, although it would have been better to get into Qualcomm. You know, that's one of those things where I guess I should have taken both trades, obviously.
The VICI imbalance is getting bigger. There's a lot of interest on the sell side here for the VICI trade. 3 million has been paired. Almost 3.1 has been paired, and they still got to get another 3.3 to do. For anyone wondering, when we looked at that earnings calendar, why did we not talk about Amazon? Because Amazon's there too. Amazon is there, right? Yeah, Amazon.
Yeah,
Amazon's there too. If you want to trade this thing at $2,000, you go ahead and have fun with it, because I'm not trading this at $2,000 with the spread. When they split, and they are splitting later this year, then we're going to be on top of Amazon and Google. But for now, I'm going to keep an eye on VICI. Okay, that would have been an easy 3 or 4 cents actually on VICI, with still sell side pressure here. We'll see how this one goes. I'm going to keep it on VICI just because of the interest, the sell side interest, the imbalances getting bigger. They are working some volume here. It's already done 25 million. They still got another 2.6, and they've paired 3.8. So a lot of interest here as it comes back up. Like I said, it doesn't always have to stay sell. It can flip to a buy as well. So we'll see how this one goes, especially towards right in the final seconds. We're talking like the final 5 to 10 seconds. That's when things get really, really hot. We'll keep this up, and we'll see if this actually sticks around or actually flips to a buy-side move right at the end of the day.
So I see with only 90 seconds to go, I see all Giazam. But without knowing, I don't know the catalyst for it. It's the first time I'm looking at it. And a late volume spike like this, right into the high, there's no trade to be had, man. It's got a 30-cent spread. 3.5 million in volume is a bit deceiving because it is not liquid at all. It's got offers that are stacked up, it's the wrong way. It's got offers that are stacked up right above the current bid ask. So like it's got resistance up here. You've got stacked bid ask. I'm not sure it's going to make a move until after 4 o'clock. And given the way that it's running right here, I feel like it could be on the midst of a breakout. Should be added to my watch list for tomorrow after seeing this late day break. But you know, it's already testing a double top. There's no trade to be had here. But if it gets through, it's an aftermarket runner that has a chance to go higher. But it has to break, and there's offers sitting in front of this current high of the day.
Yeah, VICI is gone. This is what happens when it flips. And like I mentioned to you guys, doesn't mean it's not going to flip. It could flip. And VICI flipped from a sell to a buy, and this thing took off from 50 to 70. That's the dangers of trying to go for the short. Good for information, not the greatest for trading because you need to know exactly how this plays out and how these numbers matter. As we head into the final 15 seconds, we got Valeria and Tony waiting for the bell.
Yeah, buddy.
And we got the countdown going with 8 seconds left to go.
There we go.
What's the dance today,
Where's
guys?
the
What's
dance?
the dance?
Dance it off. 4, 3,
There we go.
2, and bring it. Tony knows what's good for him because, like, in that little battle for the last ring of the bell, he knows that Valeria needs
Tony
to
learns his lesson with Valeria. I never do. I always end up playing with fire, and then I always end up getting burned with Valeria.
You see, what you guys don't see is, like, the look. Like, V flashed the look at Arun. Mm-hmm. I'm just saying, man, don't mess around. Don't mess around.
Don't mess with Valeria.
Don't mess with Valeria, man.
Nope.
Can't do it. Thank you guys again for it's been an amazing show. Good day for the market, 3.5% for the NASDAQ. I mean, we didn't really see a carry through right to the end of the day, but it's a pretty strong recovery as, of course, Apple, we're going to get those earnings later on. Like Apple always reports very, very late. But how did everything else finish up, Brendan?
A lot of green on the board today, guys. I'll show you this one simply because I can't remember the last time every single market on this board was green, and definitely the case today, top to bottom here. A lot of positivity, 2.5% there for the S&P, even small caps having a pretty good day. The NASDAQ, 3.5 for the composite, for the 100, 3% for the composite. Things are moving though, guys.
Amazon.
Yeah, Amazon's out.
What are you doing?
It's given up the gains, and now it's down another like 2.5, 3%. It looks like it's moving here. We'll get the numbers. That's starting to fall. I know Intel had already moved down. It's dragging the Qs down. Like that's the trade you're going to make.
Apple save us.
The Qs.
Apple save us.
Apple ain't coming until way later, right? Like it's gonna if it saves us, we'll be putting in these bottoms already, so it doesn't even matter. But yeah, right through like all the gains given up the ghost. This is what we talked about, man. Like the work is not done. You still have to get through these earnings. It was a disappointment for Alphabet. It was good, not great for Microsoft. And then there we go for Amazon looking to the downside. So not the greatest move here early on. And taking Microsoft with it. Microsoft even dropped $3 here.
I mean, there goes the futures market too. If anybody wants to know why we care about Amazon and these big tech names, these big index tech names, let's take a quick look at the NASDAQ futures because you'll see what's up. 13,440. Now we're trading 13,300. Let me get this on a better chart here. This is what happens when a big index name moves, and Amazon's showing it to you right there. There you go. There's your 140-point move to the downside because of Amazon. And now we're waiting for Apple. If Apple can come save us, then the NASDAQ could, at least balance itself out. If Apple can't come up with anything stellar, anything short of stellar, prepare for an interesting closeout of the month.
Yeah, so yeah, it's the guide on Amazon, man. Like the estimate for sales is like 125. The guide 116 to 121. So that's a guide lower, at least from what I saw there. So it ain't over yet, man. Of course we got Apple to come later on in the session. So you're gonna want to buckle up and tune in tomorrow morning because it's gonna be a fantastic one for the entire team down the line. Thank you, everybody. Lucas, Fahad, unbelievable job with the different camera views. I love it when you guys do this. Mark always putting in work. Maggie so busy we don't even see her today here. You heard Prad celebrating for sure. I know making some trades at the close. And Miss V, as always, doing a fantastic job. Always got to put Tony in his place, man. Just let these guys know. Get that last ring. And don't take any slack from this guy, Arun. Brendan is always giving us the news. And Sean won't be back tomorrow, but he will be back next week. He is feeling better. We want to make sure that he gets himself 100% because these markets need the people's trader. We are Trader TV Live, guys. Buckle up. Tune in tomorrow morning. We'll see what happens with Apple. It should be a wild one. Bye, guys.